Professional ethics is king of the chapters in our audit syllabus. It's going to come for minimum 16 marks, and if luck favors you, it may come for 20 marks also. And apart from weightage of marks, the most important thing is it is easy to score marks here. You can score full marks. So it's extremely important from exam point of view. It's also very important from practical point of view. Today, government, society, regulatory authorities, everyone expects that chartered accountant should have professional conduct, ethical conduct. So that's why it's also important. And then as you enter into practice, you need to ensure that you are doing practice as per professional ethics. Otherwise, there are very adverse consequences you will have to face. See, I know a case where two chartered accountants, they worked hard, they got their degree, and they entered into practice. And some senior chartered accountants came and they said that sign these balance sheets and reports of some of these companies, 2-3 companies, as we are not having the limit available with us. And they said okay, and they signed financial statement of these companies as per what senior said. Now, after a few years, these companies collapsed. They got bankrupt. And banks lost crores and crores of rupees of their loan money, and bank accused auditors that you didn't do proper audit. Assets appearing on financial statements were fake. They were overvalued. Liabilities were undervalued. And they sent a complaint to the CA Institute, and membership of these chartered accountants was cancelled. No longer they can call themselves chartered accountants. That is disastrous. Just imagine about it. CA degree is taken away from you after you get it. Nothing can be as bad as this. And even in practice, if you are into misconduct, if you do something wrong, unethical activity, that is called misconduct, then you may not get tenders, you may not be eligible to get empaneled, you may not get work easily. Lot of problems may arise. So it's very important to be strong in profession ethics so that you are able to practice properly and you don't face adverse consequences. Let's see, guys. We have divided this chapter in 4 parts. First part is Introduction and CA Act. Second part is first schedule to the CA Act. After CA Act there are schedules. So there is the first schedule. Next part is second schedule to the CA Act, and then we have guidelines and miscellaneous. So let's start one by one, guys. Background. We have seen this background, and it's a fact. Eye for eye will make whole world blind. You hit me, I will hit you, we'll hit each other, we'll harm each other, we will die. If this is the attitude, world will collapse. If person says that I earn from doing fraud, other person also gets inspired, I also want to earn from fraud, whole world will become bankrupt. If this is the attitude and approach. If one CA says that I am earning loads of money by giving the fake GST invoices and earning commission on that, others also will get motivated to do that. If everyone starts doing it, there will be a big problem for the CA Institute. Government and society would say that we don't need CA Institute, ban them, change them, let's give their powers to someone else. So we need certain rules and regulations so that chartered accountants walk straight. And that's important, guys. You see people from India, Pakistan, Bangladesh and Asian countries, they go to Dubai. These guys, they will do all unethical activities, all criminal activities in India and these Asian countries. Moment they go to Dubai, they will walk straight. Drink and drive, 10,000 dirham fine and you're deported out of the country immediately. You do something wrong, there is police available. You do some criminal activity, there is a chop square. None of these guys will do anything wrong. So it's a fact that you need strict rules and regulation to keep people on track. So first is, we are studying fundamentals of professional ethics. See, we have linked this question here, but it should be better linked with the other topic, fundamental principles. We'll study this. Now, fundamentals of professional ethics. What do you mean by ethics? Ethics are the principles which tell us what is good and what is bad. So being truthful is the good thing. You should be always truthful. You should respect others. You should fulfill your commitments. You should follow non-violence. These are ethics. So what is good and what is bad? What are professional ethics? During the course of performing practice or doing job, which things will be considered as good and which things will be considered as bad, it is called as professional ethics. Chartered accountants, it's a well defined what should be done, what should not be done. And similar professional ethics you are going to find for similar way you are going to find for doctors, company secretaries, cost accountants, and so on. So when it comes to CA, what is the source of professional ethics? That means where all these things are written. So there are 5 important sources of professional ethics. Most important being CA Act. CA Act, which is passed by Parliament, highest authority. Then below that, rules which are framed by the government of India as per requirement of CA Act. Then below that, regulations which are made by council, highest authority, council of ICA as per requirement of CA Act. And then below that we have guidelines, directions which are issued by CA Institute, but apart from requirement of CA Act. And then we have International Code of Ethics. CA Institute is member of IFAC, Indian Federation of Accountants, International Federation of Accountants. And this International Federation of Accountants has made a board, International Ethical Standard Board. That board has made International Code of Ethics, and it is mandatory for all the members to follow it. So that is also one big source of professional ethics. All these 5 are very important. They are combined and beautifully framed in a booklet called Code of Ethics. There is a booklet called Code of Ethics. There you become chartered accountant, you will get this booklet and you are supposed to do your duty as per Code of Ethics. Very beautifully explained, well defined with all examples and illustrations. That is Code of Ethics. So now we know the 5 sources and where it is written. Next is, now this Code of Ethics is divided into 3 volumes. Volume number 1 is adopted from International Code of Ethics. So it is simply copied from there. It is taken from there. It is based completely on International Code of Ethics. And it focuses on 5 fundamental principles of ethics, which we are going to study. It focuses on those principles. What are these principles? How to understanding these principles, implementing these principles, what are the challenges you will face, how to overcome those principles. It's all about fundamental principles of ethics. This first volume is all about it. It's applicable from 1st of July 2020. Then we have, and we are going to see further details about volume 1 also. Then we have volume 2. Volume 2, now CA Act, then the rules made by government, regulations and guidelines, they are all combined and explained in this volume 2. As I said, this Code of Ethics covers all the 5 sources. In volume 1, they cover International Code of Ethics. In volume 2, they cover other sources. And then we have volume 3, it's collection of the cases which were cases against the chartered accountants, how they, for what activities, for what unethical activities they were punished, under which sections and clauses they were punished. It's given in volume 3. So it divided into 3 volumes. Now, What are these 5 fundamental principles we're talking about? We see these 5 principles in essay 200 and with the name of ethical requirement. To have ethical behavior, you are supposed to follow 5 fundamental principles of ethics. Number 1, being honest and straightforward. Integrity. Integrity. Whenever you go for audits and assignments, be truthful of what information you have. Work as per the information you get. In communication, you should be truthful. In your reporting, you should be truthful. Most important, honesty, integrity. Then for being ethical, next is whenever you get information, you should interpret it irrespective of whether the person is your relative, friend, enemy. You should be unbiased, you should be neutral when you interpret data, when you make your judgments. Then while working, there should be professional competence and due care. Your knowledge and skills should be knowledge, and you should obtain knowledge and skill. You should obtain and maintain your knowledge and skills, and you should work carefully with the help of that, with due care. While working, ensure professional behavior. You should respect law. You should respect law. You should not bring disrepute to the institute. Professional behavior. We are going to see the details later on. And you're supposed to maintain confidentiality. You get a lot of secret information, just maintain confidentiality. These are the 5 most important fundamental principles on which the whole code of ethics is based. And as I said, we'll see definitions, we'll see the other matters related to them. In fact, our motto which guides CA Institute, it is not based on prosperity, it is not based on growth, it is based on ethics. Ya Esha Sapteshu Jagriti, which means eternal vigilance. That means awakening when the world is asleep. What do you mean by that? Even if world is sleeping, you be alert. You should be alert. Even if world is not following ethics, you should follow it. Even if world is not thinking about society, you should. People are not thinking about society, you should think about it. Be alert even if world is not. Be ethical even if world is not. Think in public interest even if others are not. Now let's go in volume 1. Let's go in volume 1. Volume 1 is further divided into 4 parts. Part 1, 2, 3 and 4. Part 1 focus on 2 things. Number 1, it says that code of ethics is mandatory for all the chartered accountants. They use the word professional accountants because it is based on international code of ethics. So they say that it is mandatory for all chartered accountants to follow code of ethics. And then it focuses on 5 fundamental principles. What are the 5 fundamental principles? And then conceptual framework. What are the challenges you will come across while implementing these fundamental principles and how to deal with those challenges. So it's about understanding, discussion, conceptual framework of these principles. What are the problem and how to deal with them. So it broadly deals with 2 things. Making things mandatory for everyone, all the chartered accountants, whether in practice or in job, and then discussing 5 fundamental principles. Part 2 gives additional things, additional things for those chartered accountants, those who are in service. So apart from part 1, part 2 give additional matters which should be followed by chartered accountant who are in service. Now when we say the chartered accountant in service, it will cover chartered accountants doing all the types of services, all types of employments. They can be employed full-time, part-time, or they can be employed under some contract or assignment. It doesn't, see, don't think from tax point of view where the payment will be considered as a salary or payment will be considered as a fees, what TDS will be deducted. Don't think from that point of view. If a chartered accountant is doing a job part-time, full-time, or is working under a contract or engagement, it's applicable to him. irrespective of whether executive position or non-executive position. He may be appointed in executive position doing the management work, or he may be in non-executive position working on ground level, irrespective. So it's applicable to all the chartered accountant service, whether employed or under contract, engaged in a contract for assignment, whether executive position or non-executive position. It can be highest regulatory professional bodies, or below that public sector entities, or any commercial entity, industry, service industry, or education, or NGO, doesn't matter. In fact, if we have a chartered accountant who is having COP, certificate of practice, that means he's a practicing chartered accountant, but for some time he's doing job with another CA or CA firm. If he's doing job, part 2 will get applicable. So if a COP holder is doing job, again part 2 will get applicable during that tenure to him. We are going to study this later, that yes, sometimes job is possible along with COP. Now part 3 gives additional guidance, additional matters for those chartered accountant who are in practice. So part 2 gives additional matters for those who are in service. Part 3 gives additional matters for those who are in practice. Now, chartered accountants who are in practice, most importantly, they play the real role in the society, real role when it comes to delivering services to our country and economy. So they should behave ethically. So part 3 is exclusively additional matters for those who are in practice. Apart from that, we have part 4. Again, part 4 is also for chartered accountants who are in practice. So part 3 is also for chartered accountant in practice. Part 4 is also for chartered accountants in practice. And when we talk about part 4, it gives independence standards. That means what should be independent standards, how to maintain independence. See, we study this in essay 200, that all the chartered accountants are supposed to follow fundamental principles, 5 fundamental principles. They are also called ethical requirement. But for those chartered accountants who are into audits or assurance services, they are supposed to follow these 5 fundamental principles. Plus, they are also supposed to be independent. They are supposed to be independent also. When it comes to assurance assignment, both the things are required. So part 4 is for chartered account in practice, and it gives independence standard, how to maintain independence in assurance assignments. In part 4, we have subpart A also and subpart B also. So when we talk about subpart A, it says that it is specifically independent standards for chartered accountants who are performing audits or reviews. We all are aware about the review. We discussed this in essay introduction. That when we go in depth, when you do in-depth checking, a lot of time is there, that is audit. When we don't do in-depth checking, we have less time, we do review. Correct? There is one more meaning to the word review. When senior checks work of junior, that's also called review. We're not discussing about that. We're discussing about the review engagement, review assignment. So if you want to maintain independence of audit or review engagement, part 4A is applicable. If you want to maintain independence in assignments other than audit or review, then in that case, part B will get applicable. Now, let's talk about glossary. Now, glossary is simply, it's like a dictionary. It explains important terms. Correct? Now, important terms. For example, they explain that wherever audit engagement word is used, it will mean review engagement also. It will include review engagement also. So whatever requirements are there for audit are automatically applicable for review engagement. Now, one more thing. When we say that part B is for other than audit and review, that means majorly certification work. So if you're doing certification work, then independence should be maintained as per part 4 subpart B, 4B. Then next, now see, we have very interesting thing. See, so first we had these 5 sources, they are given in code of ethics. So we are, going into one layer, one by one we are going into a layer. So we have code of ethics, then the other layer, then below that we have volumes, volume 1 to 3. Then in volume we have part 1 to 3 4. Now in parts you are going to find sections and subsections. Just like in law we have sections and subsections, similarly here also in each part you have section and subsection. Why it is there? So that it is easy to refer, remember and quote them wherever it is required. See, if you see code of ethics, this is the index table of content of code of ethics. In part 1, you will see that is section 100, which says that code of ethics is mandatory for everyone. Section 110. So part 1, you will find all sections started from 1 only, 100, 110. Then subsections. It talks about integrity and connected matters, objectivity, professional competence and due care, confidentiality, professional behavior. Then conceptual framework, how to implement this principle, what challenges you will face and so on. And then we have part 2 and its subsections. Okay, so parts are further divided into sections and subsections. Now, we are supposed to understand these structure of this section and subsection. Sections and subsections are further divided into 3 areas: introduction portion, requirement portion and application portion. 3 parts. So in introduction portion, they are going to discuss background of the topic. See, every section subsection is going to focus on topic. So they are going to discuss the background, why this topic is included, what kind of things will be in the other portion, a brief overview, background, brief overview, and sometimes it may also contain explanation of important terms. So some definitions may be included in the introduction portion. So we have an introduction portion. After introduction portion, then next we have requirement. This requirement section, the most important requirement section, explains what will be responsibility or what will be obligation of the chartered accountant. What will be the general obligation, what things they need to follow in general whenever they perform any kind of work. So there can be general obligations like these 5 fundamental principles you need to follow every time, everywhere. So these are general obligations. Then they may have specific obligation, what you're supposed to do if there's a non-compliance of law, what you're supposed to do if you resign. So there will be specific guidance, specific obligations also. So in requirement, you may find in general obligations and you may also find specific obligations. Then we have application portion. Now what is this application portion? See, application portion is going to explain how to fulfill your responsibilities, obligations. So it's going to give you factors, it's going to give you guidance, illustrations, how to implement, how to perform your obligations and responsibilities. So it's going to be a supporting area. In fact, in standards on auditing, you are going to find similar kind of structure. There will be introduction portion, there will be requirement portion, and there will be application portion. Now, when we talk about part 1, now we are going further detail. Now we are going to sections. See, we are opening layer by layer, correct? So it's like rows. See, if you carefully observe rows, you'll find layers of the petals. So there will be first layer, then the next. So those who are madly in love, they must be aware about the roses. They must have bought a lot of roses uh, during Valentine's Day and so on. So here also on the same lines we have concepts. So now we are going further detail. In part we are going in section. Section 100 simply says that it is mandatory for all the chartered accountants to follow code of ethics. Then they give further explanation. Sometimes law may say that. Sometimes law may say that. Law may say that part of the section is not applicable. Not applicable to some chartered accountants, some professional accountants. In that case, that particular portion will not be applicable. That means they're saying law will override code of ethics. That's absolutely fine. Code of ethics is made by CA Institute, and law is made by the Parliament. So sometimes law may say that part of the code of ethics may not be applicable to some chartered accountants, that will prevail, but other portions and sections of code of ethics will still get applicable. Only that particular part or particular some section will not get applicable. Then 110 explains fundamental principles. We already know that. We 5 fundamental principles. Now this question 780 is relevant here, so we have put it there. Now, what further section 110 says? It says that it is responsibility of each and every chartered accountant to understand these 5 fundamental principles and implement them while performing practice or while doing job. It's mandatory for each and every one. And they explain very interesting thing. They say that sometimes there can be conflict. Generally, these 5 fundamental principles are framed in such a manner that when you follow one principle, it becomes easy to follow the other principle. They complement each other. That's how they have been framed. But sometimes they go against each other, especially confidentiality. Now, integrity, we are supposed to be truthful. We should always say the true things. And then we, at the same time, we have confidentiality with us. Confidentiality with us. These 2 principles may go against each other. It is very much possible. They may contradict each other. We will be puzzled whether we should go with the truthfulness or whether we should go with confidentiality. Then professional behavior says that you should respect law. Again, there can be conflict whether to go with the law or whether to protect confidentiality. Again, there can be conflict. Correct? So principles, it is possible that principles contradict with each other. Now, what should be done in such case? If principles contradict, if there is a conflict while applying principles, then fourth, most important, number 1, discussion should be done. You should discuss these things with whom? You should go to your other colleagues. If you are practicing, go to other colleagues in the firm. If you're in job, again go to other employees in the organization. You consult with them. They say that whenever such things happen, you should go and discuss and consult. Then above that, you can go to lawyers. Lawyers within the organization, outside organization, or bigger than that, you can go to TCWG, those charged with governance. Or bigger than that, you can go to ICAI, Institute of Chartered Accountants of India. So if such conflict happen, you should go and talk to people and understand things better. But then, if you took consultation, that means your responsibility is over. That's not the case. After consultation, understanding the issue, you are supposed to make professional judgment what should be done in this tricky situation. There can be tricky situation. What should be done in the tricky situation? And if you're not able to get the correct answer, if you're not able to implement both the principles, you may think about disassociating from the matter, resigning from the assignment. Even that is possible. So what if there is a conflict? How to deal with the conflict? First step is discussion. Second step is making judgment. If that's not possible properly, disassociate, leave, resign. And it should be documented. What was the issue? What was the discussion? How decision was made and what was the rationale? These things should be documented. Now let's talk about integrity. We know integrity means honesty, correct? So whenever you go for doing your work, whether it's a practice or job, you should be honest and straightforward. You should work as per what information you have obtained. You should be truthful. Your communication should be truthful. Your reporting should be truthful. So you are supposed to perform your practice or job as per integrity, truthfulness, and being straightforward. Now, very interesting, what you are not supposed to do. That's extremely important. During the course of practice or job, you may come across situation that a teamwork is going on. You are associated with a team which is preparing some financial statements or reports, or below that some returns or communications or other information. They are preparing them. You are part of the team and you come to know that information in these documents is false, misleading. It is false or misleading, or it wrong information can be there. You know that the wrong information is there in these reports, or very important information is omitted or obscured, written in such a manner that it's very difficult to read, which is making it misleading. So if you're associated with few things which are false, misleading, or there are omissions or negligence, three things, then you should be careful. Being straightforward is one thing, and now you're associated with few things and you know that there are problems with the integrity, honesty, truthfulness. You have two options. Either ensure that if it's possible for you, report will consist modification. Your report should clearly tell that these informations are not truthful, they are not correct. You should clearly modify your report and explain what is the problem with the documents. Or second, if that's not possible, that's not in your hand, you should disassociate yourself. So they are saying either put in the report or you disassociate yourself. You have two options. So whenever false, misleading, if you're part of any team, you have to be careful. Now, whenever you get information, you have to interpret it, you have to make your judgments on continuous basis throughout the audit. Whenever you get information, we have to make judgment. You should ensure that you should be objective. That means you should be unbiased. So while accepting assignment, you should carefully think whether there will be circumstances pressurizing you to change your professional judgments. Suppose a lot of relatives are there in the company, as shareholder, as director. It may pressurize you to change your professional judgment. Correct? So you should be careful. Don't accept the assignments which are going to put you under pressure. Don't accept such assignments. After accepting, ensure that you are objective. It includes three things. Number one, don't come under pressure. Being objective means unbiased. Don't come under any pressure, undue influence of others. Don't come under pressure. Next, don't just work for personal benefit. See, there's a very personal benefit. A chartered accountant is doing an audit. Fees is pending for few years. Suppose fees comes out to be 2 crore rupees. Now the situation is, if he gives clean report, entity will get loan from the bank and his fees will get repaid. He will recover his fees. But if he gives a correct report, proper report, then they will not get the loan and they will not get the fees. It's a tricky situation. You should always be careful. Don't put personal benefit ahead of professionally important matters. So if there's a conflict of interest, manage it carefully. Being objective means not coming under pressure. That means not working for only personal benefit. And third, being unbiased. That means not having very strong opinions, strong feeling, emotion, opinion. You may have about people, like if you say Pakistan. So you may feel that every person who comes from Pakistan is a terrorist. See, I am not in favor of Pakistan. I don't like. I'm just giving an example. You may think he's a terrorist. And that's called being prejudgmental. That's called bias. So being objective, think about objectivity when you are accepting assignment. Think about objectivity. You are performing assignment. Keep in mind three things. No undue. Don't come under pressure. Don't work for only personal benefit, and be free from bias. Correct? Now, professional competence. What do you mean by professional competence? See, we are studying some of the theory portion. So this theory is there. It may sound little boring, but that's fine because it's important. All these questions can be there in MCQ also and in descriptive also. Correct? But anyways, we have to go through that, understand it and retain it. Now, see, first you remember broad things, broad meanings, then automatically you will be able to remember specific things. So focus on broad things first. Broadly what it wants to say, that will be real beneficial. Competence means knowledge and skills. Knowledge and skill, that is competence. And using that knowledge and skills, you have to work carefully. So competence, see, when we say that we are performing quality work, we study this in Essay 220 and SQC 1. If the whole work of the assignment is systematically planned and designed as per law, rules, regulations and standards which are applicable, properly designed as per that, and the end report is also prepared as per law, rules and is appropriate, is reliable. When these two things are there, work is done systematically, end report is reliable, we say that it's a quality work. So what they're saying, as a chartered accountant, you should attain and maintain professional competence and use it carefully with due care to ensure that work is performed as per law, rules, regulations and technical and professional standards. What do you mean by competence? What they say about competence? You should attain and maintain professional knowledge and skills which are required for assurance engagement as such, normal engagement. Attain and maintain that. After attaining and maintaining, on continuous basis, be aware what changes are happening around you, whether new act is coming, new business practice are there, new system is coming up. Just be aware, understand what changes are happening around you. Then should undergo continuous professional development. So one thing is that you should be aware what changes are happening. Now, once you know the changes, you should develop yourself. Suppose there's any amendment, you can go for seminars, training, courses to maintain your professional competence. Apart from yourself, you should take reasonable steps to ensure that people who are working under you, they also attain and maintain professional competence. You should be aware about yourself and you should be aware about others who are working with you. Working with due care, diligently. Due care, diligently, that means doing the whole work thoroughly, doing everything thoroughly, carefully and on timely basis. Thoroughly, carefully on timely basis. And chartered accountant should apply sound judgments specifically. Working carefully, it includes a very important thing, that when you make professional judgment, you should be careful. You should do it carefully. That's due care. Now, irrespective of, you may be having a lot of competence. You may be having competence. You may be working carefully. You are doing good. But still, you should always explain client. But you should always explain client that there are inherent limitations. Even when you are very competent, even when you are working carefully, there may be situation where things may go wrong. Always explain what are the inherent limitations. Now, confidentiality is very, very important issue. See, there's a fiduciary relationship between client and chartered accountant. It's very important for chartered fiduciary. It's a relationship of trust. Chartered accountant comes across a lot of secret information, comes across secret lot of secret information of the client, and he is supposed to ensure confidentiality. If across society chartered account will maintain this confidentiality, people will trust them more and free flow of the information will happen. And if they don't do it, people will lose the trust and they will stop taking services from chartered accountants. That's a very important part. So confidentiality is very important. It's required. Now they further explain situations in which you are supposed to maintain confidentiality. Again, we have, see, if you observe our charts and teaching, you'll always find some kind of flow which makes remembering things extremely easy. So now we have examples where we are supposed to maintain confidentiality. So you have a meeting with prospective client or prospective employer. Your prospective, they can become your client or become your employer. During this meeting, you may come across a lot of confidential information. You are supposed to maintain confidentiality even if that person is not yet your client or not yet your employer. You are supposed to maintain confidentiality of prospective people also. Suppose you get the work, you go to office and you party. In office also, you are supposed to maintain confidentiality. Don't give secret information to each and everyone within the firm. No, not at all. Confidential information should be given to only limited number of people where it is required. Maintain confidentiality within office also. Then you go home. Even when you go home, you talk to your relatives or friends or close associates in social environment. Maintain confidentiality. Don't give secret information even to your relatives, friends, and your close business associate. No, not at all. Then you are working, you are having team meeting. In team meeting, explain people that each and everyone is supposed to maintain confidentiality. Explain them, give them the importance. What can be consequences if they breach confidentiality? What kind of penalties and punishments will be there? Then while working, you get a call from broker. Never use confidential information for its own advantage or advantage of any third party. Don't do insider trading. Now the assignment is over, last day at the client. Even when the assignment is over, you have left the client, you are supposed to maintain confidentiality. Still you are supposed to maintain confidentiality. So these are the 6 instances. They are giving examples that at these 6 places you are supposed to maintain confidentiality. Then comes exception. Exception. We can breach principle of confidentiality in 3 circumstances. If it is required by law, if law says that just forget about confidentiality and go and give this information. Example, we have section 143 subsection 12, fraud reporting. Fraud reporting, irrespective of confidentiality, we are supposed to give information about the fraud to central government. Then if it is authorized by client, if client himself is saying that just go and give this information, we can definitely give it. Unless it is prohibited in any other law for privacy related matters, etc. If authorized by client, give information. Or it is third one, professional duty or right. To make reports and certificates is professional duty. So while performing that duty, whatever information you have to give, you have to give. Don't think about confidentiality. Suppose some investigation is going on and you have to defend yourself. Again, you can give confidential information. Correct? Don't think about confidentiality. It is your right. So sometimes it is your duty, sometimes it is your right. So there are three exceptions: required by law, authorized by client, and sometimes there is a duty or right also. Now there are further explanation of the point. Required by law. Sometimes there can be law which says that during proceedings, that means during legal cases, auditors are supposed to give this information. There can be law which says that if there is a non-compliance of law, infringement of law, auditors are supposed to give this information. There can be such laws. Internationally, there may be such laws. In India, as on today, there are no such laws. There is only fraud reporting. There is no law which says that auditor is supposed to report during the legal cases, or auditor is supposed to report wherever there is an infringement of law. No, as on today, it's not there. So it's just an example. If it is authorized, further, if it is authorized by client, if client authorizes, go and give information, and if it is not prohibited under any other law, generally it is not, you can go and inform. Duties, you can break confidentiality for rights and duties. See, there is a shortcut, reels. Suppose review is going on. We study this in review, peer review chapter. If review is going on, someone is checking your work, you can explain people, you can defend yourself by giving confidential information, no problem. Suppose inquiry or investigation is going on, again you can defend yourself. Again you can defend yourself by giving information. Suppose legal proceedings are going on, again you have right, you can defend yourself. You can defend yourself by giving confidential. It's your right. Suppose you are making reports and certificate as per technical and professional standards, you have to follow those standards and give information in reports and certificates. It is your duty. It is your duty. So these are confidentiality, there are examples, there are exceptions. Whether to give confidential information, not, and how to give this information. And how to give this information, there's important thing you need to keep in mind, and that is hats. H, you should always think, is it harmful for the client or any other third party? How harmful it is going to be for the client, employing organization and third party. Always assess what level of damage can happen because of breach of confidentiality. A stand for address. Always think about it, to whom this information addressed, to appropriate recipient, and further ensure that appropriate recipient is selected. You should always, whenever you give information, it should be addressed. It should be, information should be framed in such a manner, it should be for proper person, and you should select the person carefully. So communication should be properly planned, and proper person should be selected to whom it should be addressed and how it should be addressed. Whether central government, ministry, or state government, or CBI, enforcement directorate, you should carefully how it should be communicated and to whom it should be communicated. Type of communication. So if a letter is sent, many people may have access. Same with the email. But if you go in person and explain, only one person will have access and give hand delivery. Type of communication will be important. Whatever information you giving, it should be known to you, and you should be confident that this information is correct. It should be substantiated by you to the extent possible. Whenever you change client, when you go from one client to another or go from one job to another, it is absolutely fine if you use skills and knowledge which are achieved in the previous assignment. Absolutely fine. But you can never give confidential information of the past clients or employer to the new ones. That's not allowed. Professional behavior. Professional behavior include two things. Professional behavior means respecting law. Respecting law, rules and regulation, point number 1. Law, rules and regulation, and not to do anything which bring disrepute, disrepute or discredit to the profession. Keep in mind two things. So they are giving examples that you have to maintain professional behavior. So example, don't accept any assignment which bring disrepute to the institute, their integrity, their objectivity. For example, don't take work of terrorists. Don't work for terrorists. Don't work for smugglers. Correct. It will bring bad name to us if we are doing such things. Don't do any after. So while taking work, you should be careful. After taking work, you should be careful. Don't do anything where people may think, where third party would likely to conclude that you have damaged credibility of the institute. So while accepting, be careful. Don't accept any work which will damage credibility, disrepute, and while working also be careful. Now there is one test we'll discuss about this later. So whenever in doubt whether you are following fundamental principles or not, you should always think from the point of view of reasonable and informed third party. It's called third party test. We are going to study about this later. RITPT. You should always think, if the same level of information is given to a reasonable and informed third party, whether their conclusions are going to be same as my conclusion. So if you are in doubt whether it will bring disrepute, think about it. If this information is given to third party, whether they will think that it is whether they will think it is a discredit to the institute, wrong name to the institute. That's called third party test. We'll discuss about it later also. Most important now, promoting yourself. When you are promoting yourself, that time you should be extraordinarily careful. Especially that time professional behavior is required. You should be honest and truthful. Don't do anything. Don't make exaggerated claims. Don't make exaggerated claims about yourself, about your services or your experience. Don't make exaggerations. Don't just hype it unreasonably. Don't make disparaging, insulting comments about other chartered accountants and unsubstantiated comparison with other chartered accountants. Don't insult others. Professional behavior includes promoting ethically. Promoting ethically. Don't make exaggerated claims. Don't insult others. Don't insult others. Don't go against the guide. When you are promoting yourself, don't breach advertisement guidelines. If there is a doubt, there is always a third party test. And if you are not able to do that, you can go and talk to Ethical Standard Board. If you are in doubt, go and talk to them and confirm whether you are ethical or not. So professional behavior, two things, and be extra careful when you promote yourself. So now guys, we have seen introductory part. We have seen 5 fundamental principles. Now we have to see the conceptual part. What are the issues, matters which can arise when we go and implement these 5 fundamental principles? How to tackle these issues? How to address these issues? Let's see. So the first thing is threats. Situations or circumstances which put pressure on chartered accountants to do wrong things, to give wrong report, they are called as threats. So, for example, if we talk about threats, suppose brother of chartered accountant is sitting as a managing director. Now it will be very difficult for him to go against his brother. This situation will put pressure on the chartered accountant to give wrong report. So that is a threat. See, now here we are doing conceptual discussion as per Code of Ethics. Don't apply Companies Act. Don't apply disqualification of Companies Act. See, if question is as per Companies Act, then answer it as per Companies Act. If it is as per Code of Ethics, then use discussion of Code of Ethics. So try to segregate things. They will always specify how to, from what point of view answer should be given. Okay. Now, so 3 things we have to see in when we are in audit and when we are doing job. We have to identify threats. Threats, that means issues, circumstances which will put pressure on us to do wrong things. We need to evaluate the threat. How big is the threat? Is it acceptable? Can we continue with the threat? And then how to address, how to deal with, how to manage the threat. So now we know fundamental principles. So these threats are the issues, matters which may arise in practical life. Identify these threats, evaluate these threats, and address these threats. We are going to see all the 3 things in detail one by one. So now we need to understand what are the different types of threats involved. That means negative circumstances which are involved. So there are 5 types of threats. Shortcut is I am fair. I stand for interest. I stand for interest. Self-interest threat. Suppose circumstances or situation is such that financial interest, financial benefit of chartered accountant is connected with the client, or other benefit like status, his personal likings, dislikings. These benefits are connected with the client. To protect these interests, he will be under pressure to give wrong report. When the circumstances are such that his financial interest or other interest, these benefits are associated with the client, and to protect these benefits, to get these benefits, he may be under pressure to give wrong reports. Such threats are called self-interest threat. For example, if chartered accountant is having investment in a company, that means his financial interest is in the company. He will be under pressure to give clean report, to give wrong report, so that his financial benefit is protected. Such situation, such circumstances will be called as self-interest threat. Then next is F for familiarity threat. Now what is this threat? When the circumstances are such that close relatives, friends of the team members are sitting in the organization of the client, sitting in the client company as directors, officers, or employees. Now it will be very difficult for auditor to go against them. This will put pressure on the auditor to give wrong report. That is called familiarity threat. So if there are close relationship with the client or its companies, it will create familiarity threat. Or there is a long association. We are doing audit for 25, 30, 40, 50 years. There will be so close relationships with the client that it will be difficult to give report against them. It's very normal in Indian circumstances. You will find that grandfather used to do the same audit, his son used to do the same audit, grandson is doing the same audit, and now the relationships are so close. Correct? Marriages are happening between these two families, auditors and the promoters or directors. Such situation is there. You go around and see every CA firm is famous for some particular group. There are so close relationship. These close relationship create familiarity threat. It will be difficult for auditor to give honest reports, proper reports. That is familiarity threat. Then advocacy threat. If auditor is performing 2 assignments at one point of time, at a particular point he is doing audit, and at the same time He is helping company to go for IPO, FPO and get more and more money by valuing shares. So he is doing audit, at the same time he is promoting shares of the company. He is doing audit, at the same time he is fighting litigations on behalf of the company. He is doing audit, at the same time he is lobbying that means lobbying for the company. Lobbying means going to politicians, political parties and convincing them, explaining them why particular law should be brought, why particular thing should be done. That's called lobbying. So at one point of time he is doing audit, at the same he is doing these other assignments. It will create conflict, because in audit you are supposed to report negative things, and in other assignments you are promoting, you are protecting the client. So these two assignments will conflict each other, and it will create pressure on the chartered accountant to give wrong reports. That is called advocacy threat. So you are doing audit of the you are doing audit of the entity, where you are when you are promoting their shares, fighting litigations for them or lobbying for them. We are going to see example of each and every threat. Intimidation threat. If the circumstances are such that auditor is threatened, he will be removed, he will be replaced, there will be litigation against him. If such threat, if he is threatened in such a manner, client is trying to frighten the auditor, if that is happening, then that is intimidation threat. In this pressure, some auditors may give wrong reports. Intimidation threat. Self-review threat. When the situation is such that auditor is supposed to check his own work, that is called self-review threat. He only designed internal control system, now he is only auditing. That means indirectly he is checking his own systems. Self-review threat. He only prepared basic accounting data. He only prepared fixed asset register. Now he is only supposed to audit it. Self-review threat. He only prepared books of accounts. He is supposed to audit. Self-review threat. When circumstances are such that he is supposed to check his own work, his own judgments, that is called as self-review threats. So guys, there are 5 kind of threats. We have discussed an overview of each type of threat. Now let's go and see exact examples. So let's talk about self-interest threat. When the circumstances are such that financial or other interest of the auditor are associated with the client, it will put pressure on him to give wrong reports. See, we have changed the chart little bit. Those 2 arrows, we have cancelled those 2 arrows, financial interest and other interest, and we have created a mnemonic, BP limited. So self-interest threat is increasing BP of the auditor. BP limited. B stand for, if auditor or his family is having close business relationship with the client, then to protect this relationship, he may go for a wrong report. Self-interest threat. P stand for personal gain. There can be a situation where auditor has liking for a particular type of business. He likes particular type of research, or he is having keen interest on financial data of the company, because with the help of that he is able to predict economy, or he is able to manage his funds. There may be a situation where auditor is having keen interest in information, data or knowledge of the client, which gives him personal satisfaction or personal gain. To protect this personal satisfaction, personal gain, he may give wrong report Again, that is self-interest threat. B stand for to protect business, close business relationship, to protect his personal gain, his personal satisfaction. P again stand for he knows that if he gives clean report, he will become future CFO of the company. There is a potential employment in the company. To protect his opportunity of potential employment, he may go for wrong report. L stand for losing client. Losing client, there can be circumstances. There can be circumstances. There can be circumstances where already relationship with the client is on the rocks. It's not going good. He on the rock, things are not going good. Client is planning to remove the auditor. Client is planning to remove the auditor. Now, in these circumstances, to avoid losing client, he may go for wrong reporting. He may go for pleasing the client. If the circumstances are such that he is going to lose the client, he is getting removed, then to protect him, he may go for wrong reporting. That is again self-interest threat. Then T stand for amount of fees which he earns. Amount of fees which he earns from the client is huge. It's a very big portion of the total fees. To protect his total fees, big percentage, he may again go for giving wrong report, self-interest threat. D stand for he may have direct equity investment, debt investment, or he might have given loan. To protect that equity investment, debt investment, loan, he may go for wrong report, self-interest threat. To protect business relationships, to protect personal gain and benefit he gets from the information of the client, to protect potential employment, to protect loss of client, to protect total fees, to protect direct financial interest. These are the examples which create pressure on the chartered accountant to give wrong report. These are self-interest threats. Then examples of familiarity threat. Now, what is that familiarity threat? Suppose there are close relatives of the team members are sitting as director in the company. How I will go against the directors? How I will go against the director? My relatives are sitting as directors. My relatives are sitting as officer in the company. My relatives are sitting as employee. That employee which is closely involved in preparation of financial statement, he has a significant influence on preparation of financial statement. They call it subject matter. So if relatives of the team members are sitting as directors or officers or employee who is involved in preparing financial statement, such big positions, it is going to create pressure on the chartered account to give wrong reports. So because of the close relationship, again there will be pressure to give wrong report. This is familiarity threat. This is going to generate sympathy towards them, and he may be tempted to give wrong report. Then former partner of the firm, our guru, person who taught us everything, that person is now becoming director of the company, officer of the company, or taking position as an employee who is closely involved in preparation of financial statements. This will create a lot of pressure. This will create a lot of pressure. Okay, a lot of pressure on the company, a lot of pressure on the chartered accountant to give wrong reports. So if relatives are sitting in important positions, our former partner, our guru is sitting on the important positions, it's going to create pressure. Familiarity threat. If there is a long association with the client, 10 years, 15 years, 20 years, 25 years, they are so close relationship, it's again going to generate sympathy, create pressure to give wrong reports. Advocacy threat. Chartered accountant is performing audit. Chartered accountant is performing audit and at the same time he is doing one more assignment for the client for promoting shares in market for IPO and FPO. Now both the assignments in audit you are supposed to report on negative things. While promoting share you have to focus on the positive things. Because of this conflicting assignment there will be pressure to give wrong report. So if he is doing audit and at the same time he is promoting shares, it will create advocacy threat. He is doing audit and at the same time he is acting as an advocate in a litigation or a dispute for the client. That's going to again create advocacy threat. He is doing audit and at the same time he is lobbying, convincing politicians and political parties to make a legislation in favor of the client. Again they are conflicting. It will create pressure to give wrong report. Advocacy threat. These are examples, 3 examples of advocacy threat. If client is threatening, if you don't give clean report, we will remove you, we will replace you, we will bring someone in place of you. Intimidation threat. We will replace you, change you. If company is pressurizing CA employee, you do all the adjustments, you do all the manipulations, otherwise we will not give you promotion. Do wrong things, else we will not give you promotion. Intimidation threat. See, all these threats are for chartered accountants in practice as well as chartered accountant who is doing job. So bigger thing is, see, it's in a sequence. Threatened by removing, replacing, dismissing auditor, intimidation threat. Threatened by not giving promotion, intimidation threat. Pressurized by seniors. We are the seniors. We have more knowledge. We have more experience. Do as per what we say. We will not help you. We will not support you. We will spoil your career. Intimidation threat. First giving significant gifts to auditor and then blackmailing him. We will disclose it to everyone that you took such big significant gifts from us. Intimidation threat. Then self-review threat. See, the examples which are given here are less as compared to what were given in the earlier module. After changes in the module, they have reduced number of examples. Correct? But then I am going to explain it a little bit more because one point is very interesting. There can be MCQ on that. So what is self-review threat? Situation where auditor is supposed to check his own judgments, his own work or work of his colleagues. In this situation, he will be under pressure. He may come under pressure to give wrong reports. Correct? Like, he only created internal control systems. And now he is only doing the audit. He will be under pressure to write only good things. Because he only made the systems. He is doing his own work. He will be under pressure to write only good things. That is self-review threat. Or he made basic data like fixed asset register. He made fixed asset register and now he is only doing the audit. Self-review threat. He made data for actual valuation. He is doing the audit. Self-review threat. He has done accounting and he is only doing audit. Self-review threat. He has prepared financial statement. He is doing audit. Self-review threat. And now very interesting. Directors, officers, employee who is involved in preparing financial statement Now, director of the company, officer of the company, employee of the company who was preparing financial statement, he is now becoming member of the team, member of the audit team. See what will happen? They did all the wrong things as a director, officer, employee. Now they are becoming part of the audit team and they are involved in the auditing process. So what is happening? By becoming part of the audit team, they are going to check their own work. And what do you think they are going to do? They are going to give all clean reports. So situation where auditors, audit team members are checking their own work or work of their colleagues, that situation is going to create self-review threat and put pressure on the chartered accountants to give wrong reports. And this is very interesting. Now understand the difference. Understand the difference. If our relatives are sitting as directors, officers, employees, our partner is sitting as director, officer, employees, how we will go against them? That is familiarity threat. But if director, officer, employees, they come to the audit team, they are checking their own work. Now the threat changes. It will become self-review threat. I hope you are getting it. Our people going in the company, familiarity threat. Companies people coming in audit team, self-review threat. So that's what they're saying. They made the financial systems, they are only doing the audit, self-review threat. They made the original data, accounting, they are doing the audit, self-review threat. They prepared financial statement, they are doing audit, self-review threat. Apart from these threats, so these are 5 famous types of threat. Apart from that, there is possibility of other threats also, which cannot be categorized. This is called unique threat. For example, some personal information is taken and blackmailing is done to give wrong report. Religious ideology is used to give wrong report. Political pressure is used to give wrong report. Kidnapping is done to pressurize to give wrong report. They will be called as unique threats, which are not categorized above. So even that is possible. Now next is evaluation of the threat. So once you come to know about the threat, you are supposed to find out whether this threat is acceptable or not. Acceptable means even if threat is there, we are confident that we will be able to follow 5 fundamental principles and perform our assignment without any problem. That's called acceptable level. So once we identify the threat, we are supposed to understand, evaluate, measure whether the threat is acceptable or not. Now, what do you mean by threat is acceptable? What do you mean by threat is acceptable? We will consider threat as acceptable. We will have to check whether threat is acceptable by applying RITPT, reasonable and informed third party test. We will have to apply RITPT, reasonable and informed third party test. Now, what is this reasonable and informed third party test? See, I will give you a parallel example. Suppose anytime you want to find out, correct, whether your actions are ethical or not, you should simply think, if I share this information that I am doing this activity in this particular situation with my parents, and if my parents are going to say it is absolutely fine, ethical, that means it is ethical. If they are going to object, that means it's unethical. So I simply have to think how my parents will react and I will get the answer. On the same lines, we have to think here. We simply have to think, if I provide all the information which I am having about the situation, about circumstances, with neutral, independent, knowledgeable third party, and if their conclusion is also the same conclusion which is my conclusion, it will prove that my conclusion is appropriate. If I am going to give information third party and they are also going to conclude that threat is acceptable, and I am also concluding threat is acceptable, that means my conclusion is appropriate. So whether if you want to find out whether threat is acceptable or not, you have to apply RITPT. So we are discussing more on RITPT. So we have to make our conclusion and then evaluate whether our conclusion is appropriate. We simply have to think, what if I give all this information to neutral, knowledgeable third party? Are they going to have same conclusion that the threat is acceptable like I am having? Then we will call it acceptable level of threat. Now, you may apply this test by simply thinking about it, or you may apply this test by going to a specific third party. You can go to specific third party and share all the information and ask for their conclusion, and then from that conclusion check your conclusion. Both the things are possible. You may simply think about it, or you may go to third party and share information. If you are going to third party, that third party need not be a chartered accountant. Maybe a chartered accountant, maybe a lawyer, maybe a company secretary. Person should be neutral, should be knowledgeable, who is able to understand the situation and make good interpretation in present circumstances. So when we are evaluating things, we use RITPT test, a reasonable informed third party test. Now, what is this evaluation of threats? Evaluation of threats. Okay. Now, what is it? What is this? Okay, guys. This is very simple. This is very simple, straightforward. Let's read. We already discussed this in a chart. The conditions, policies, and procedures described above might impact the evaluation of whether a threat to compliance with fundamental principle is acceptable. We have to see circumstances, positions, policies, situation to find out whether threat is acceptable or not. An acceptable level is a level at which a professional accountant using a reasonably informed third-party test would likely conclude that accountant complies with fundamental principles. If the conclusion is that he is able to comply with fundamental principle, there are no problems. That means threats are of acceptable level. They are not having any huge impact. RITP test. The reasonable informed third party test is consideration. Consideration means to think carefully. It's a test where he thinks carefully by a professional accountant about whether the same conclusion would likely be reached by another party. Such consideration is made from the perspective of reasonable informed third party who weighs all relevant facts and circumstances that the accountant knows. He shares everything what he has or could reasonably expected to know at the time the conclusions are made. Reasonable informed third party does not need to be accountant. The other person may not be accountant, but would possess the relevant knowledge and experience to understand, evaluate appropriateness of accountant's conclusion in an impartial manner. Now, addressing threats. So now we identified the threats. There are 5 different types of threats. We evaluated it. Suppose our evaluation says that threats are not of acceptable level. They are above acceptable level. It is affecting professional judgments, his activities and reports. It's affecting what should be done. There are 3 options. Option number 1, eliminate the threat. Eliminate the threat. Suppose you are having shares of the company. Sell shares. Self-interest threat will go away. Suppose relative of the team member are sitting as director. Change the team member. Threat will go away. So you can try to eliminate the threat. See if eliminating is possible. If eliminating is not possible, then go for apply safeguards. Safeguards are the actions which are going to reduce level of the threat. Apply safeguards. Option 3, if it is not possible to eliminate or not possible to reduce threat to an acceptable level, then in that case you are not left with any option. You will have to resign, get disassociated with the assignment. And these three things should be followed in the same sequence. First, you should see if it is possible to eliminate the threat completely. If that's not possible, then you should check whether it is possible to apply safeguard and reduce threat to acceptable level. When even that is not possible, then you should think about declining or ending the client relationship, declining the client or ending the client relationship, because now no other option is left. Addressing threats. If professional accountant determines that identified threat to compliance with fundamental principles are not acceptable level, if a professional accountant determines that identified threat to compliance with fundamental are not acceptable level, if they're not acceptable level, the accountant shall address the threats by eliminating them or reducing them to acceptable. Eliminate them or reduce them to acceptable level. The accountant shall do so by, how he is going to address threat? Eliminating the circumstances. Eliminating the circumstances including interest or relationship that are creating threats. Eliminating the circumstances including interest or relationship that are creating threats. Eliminate those circumstances. Apply safeguard steps where available and capable of being applied to reduce threats to an acceptable. Reduce threat to acceptable. Decline or ending specific professional activity. You may resign, you may decline or you may resign doing a particular assignment. Actions to eliminate threat. Depending on facts and circumstances, a threat might be addressed by eliminating the circumstance. You may remove the circumstances creating the threat. However, there are some situations in which threats can only be addressed by declining or ending the specific professional activity. You should try to eliminate or reduce it, and sometimes it is not possible. This is because possible you decline or resign. This is because the circumstances that created threat cannot be eliminated and safeguards are not capable of being applied to reduce threat. Safeguards are not able to reduce threats to acceptable level. Now safeguards. Safeguards are the actions with the help of which we can reduce the threat. Now, which safeguard is going to reduce which particular threat, that is not that important. Please don't get into it. Just understand one thing, that this action can reduce the threat, and if that is the case, it is a safeguard. So actions which are able to reduce the threats to acceptable level, which may be able to reduce threat to acceptable level, that's called as safeguards. Examples of the safeguards: safe parade. As for separate team, if you know that confidential information is involved, make a small experienced team for confidential information, and other part of the team is not involved. If within your team you make a separate small team for confidential information will remain with few people, and it reduces possibility of leak of information. Greatly reduces possibility of leak of information. So making separate smaller teams for confidential information is going to reduce level of threat. It is going to reduce threats towards confidentiality. It is a safeguard. Now, which particular threat? Don't think much about it. So this is going to reduce threat towards confidentiality. Then you appoint some CA firm, appoint another firm to perform or re-perform very sensitive area of the assignment, so that you don't end up giving wrong reports. That is also very important safeguard. That reduces threat. Appointing some firm to perform or re-perform a particular sensitive area of the assignment, so that no mistake happens. Correct? That is a safeguard. No wrong report is given. That is a safeguard. Assign more time and more qualified senior people to a particular part of the engagement, so that again, to avoid doing mistakes, avoid giving wrong report, it is a safeguard. R stand for reviewer. Appointing a very good reviewer, knowledgeable person, knowledgeable Knowledgeable independent person who is not member of the team. Not member of the team. Correct? So you appoint a very good reviewer who sees all the work in and out and make conclusion whether anything is wrong. If you have a good reviewer, good reviewer who's not a part of that audit team, that reduces self review threat, that because that reduces chances of giving wrong report. Different partner, different teams and different reporting lines for assurance and non-assurance client. Separate team partner doing audit. Separate partner team and separate vertical altogether doing other work. This will avoid conflict of interest. This will again reduce the threat. Different partner and different team for assurance and non-assurance. All these are safeguards. Now we are going to very, very interesting topic of having a wonderful name, and that is NOCLAR. NOCLAR. What a wonderful name. What a wonderful name, NOCLAR. What is it? NOCLAR means non-compliance of law and regulations. Chartered accountants may come across situation where client or employing organizations, they are not complying with law or regulation. In this situation, what chartered accountants are supposed to do? They should inform their seniors. They should inform their seniors what they should talk, what they should explain. Are they supposed to go to any authority? Are they supposed to go to parent company? Are they supposed to give any public notice? What they should do? What are their responsibilities? What they should do? That's a big question mark. And here comes NOCLAR. What do you mean by NOCLAR? What do you mean by NOCLAR? NOCLAR is a part of Code of Ethics. It gives specific guidance what chartered accountant should do if they come across non-compliance. There is section 260 of part 2 of Code of Ethics. What should chartered accountants in service do if they come across non-compliance by employer, or below that TCWG of the employer, or management of the employer, or employee of the employer, any other employee of the employer? What should CA in service do if there is a non-compliance of law by employer and its people? Then there is section 360. Section 360, that is given in part 3. What should CA in practice do if he comes across non-compliance by client? Non-compliance by client, or TCWG of the client, or management of the client, or employee of the client. What is he supposed to do? So these are specific guidance given in Code of Ethics, section 260, 360, explaining what we are supposed to do if we come across non-compliance. What do you mean by non-compliance? Non-compliance means going against, doing something which is contrary to existing law, rules and regulation. That's non-compliance. That means it includes omission, not doing something which is required. You are not taking permission. You're not taking permission, you're not maintaining registers, you're not filing returns. That is a non-compliance. You are going against the law. You are crossing the pollution limit. You are crossing pollution limit. Correct? You are crossing the limits given by the law. That is also non-compliance. So non-compliance includes omission, it includes going against the requirement. It can be intentional or unintentional. It covers both, whether it is intentional or unintentional. By only employer, it's TCWG, management and employee. Client's TCWG, management and employee. Only limited set of people. We are not interested in non-compliance by n number of people. We are not here to do public service. We are interested in non-compliance by specified people only. See, it is not going. So NOCLAR is specific guidance if there is a non-compliance by specific set of people. We are not covering personal misconduct. Now, what people do in their personal life, which is different from business or professional life, we are not bothered. It is not covered by NOCLAR. If person does drink and drive, not covered by NOCLAR. If he does, if he hits someone, not covered by NOCLAR. If he is doing forgery at home, forging will of grandfather, it's a personal thing, not covered by NOCLAR. NOCLAR doesn't cover personal non-compliances of the law, personal misconduct, personal wrong things. It doesn't cover non-compliance by other parties. It's what supply, he not interested in what supply, if suppliers are doing non-compliance, not interested if suppliers are doing non-compliance, customers are doing non-compliance. We only focus on non-compliance by specific set of people. And they're explaining examples, what, in which areas you will come across non-compliance. Examples of different types of non-compliance you may come across. You may come across financial crimes in a sequence of severity. Terrorist financing. Below that, you may come across money laundering, black to white. You may come across bribery, corruption. You may come across insider trading. You may come across fraud reporting. You may come across tax evasions, or involving financial matters. You may come across where financial products and services are not as per requirement of RBI, policies are not as per requirement of IRDA, client data is not protected, or other laws. You may come across environmental limits are not complied with, environmental protection law is not complied with, public safety, public health and safety is not complied with. So these are the examples of different non-compliance. It can be financial crimes, it can be financial matters, it can be other matters also which are relevant for the entity. It can be other matters also. What is objective of NOCLAR? Why it is made? When non-compliance happens, chartered accountant should not run away. Oh, confidentiality, confidentiality, confidentiality. Simply shut your eyes, it's a confidentiality, stay mum. No, that's not a correct approach. They should respond. They should behave responsibly, they should respond. NOCLAR is made so that chartered accountant takes some important steps if there is a non-compliance. It is only a clarification. It is not increasing responsibilities and duties. Listen guys, compliance of the law is responsibility of the management. Prevent, detect, correct non-compliance is responsibility of the management. To find out whether non-compliance has happened is responsibility of the court. These responsibilities are as it is. There is only clarification. What should be our response if there is a non-compliance? This is not to increase any liabilities or obligations. It is only a clarification. What should be our response? Other responsibilities remain same as they were. They are not affected by NOCLAR. In fact, NOCLAR emphasizes that managements do their work properly and leave few things to court. It is not your responsibility. Some important clarifications about NOCLAR. Important clarifications about NOCLAR. See, first of all, now NOCLAR gets, as NOCLAR is applicable, that after NOCLAR, does it mean that we are supposed to increase our legal knowledge? No. We are supposed to maintain same level of legal knowledge as we used to maintain earlier, which is required for generally performing audits and other assignments. After NOCLAR, it doesn't mean that we have to increase level of legal knowledge. That is not required. We are supposed to maintain the same knowledge which is generally required to perform the assignments which we perform. That's it. So after NOCLAR, it definitely doesn't mean that we should increase our knowledge level. Is NOCLAR increasing our duties? No, it is simply giving clarification. Compliance is responsibility of TCWG management. Prevention, detection, correction is the responsibility. To find out whether non-compliance happens, responsibility of court and adjudicating authority. It is not at all increasing our responsibilities and duties. It is simply clarifying what should be done if there is a NOCLAR. It is simply giving clarification. It is not increasing our duties or responsibilities. It is only clarifying how we should respond. Coverage. Are we supposed to go and check all the different types of non-compliance? Coverage of NOCLAR is definitely more than SA 250. It is covering a lot of non-compliances, but not everything. We are not concerned with personal misconduct of the people. We are not concerned with non-compliances by other parties. No, not at all. And we are not concerned with matters that are inconsequential. That means immaterial. Inconsequential means that means very, very small, immaterial. So there is no need to have more legal knowledge, no increase of duties. Correct. Coverage is good, but definitely not covers everything. Whether every non-compliance we are supposed to go and inform any authority? No, that is not the case. As per NOCLAR, if certain conditions are fulfilled, then only we are supposed to go to authority explaining the non-compliance. And in that, we are supposed to stay mum if law prohibits. Yes, sometimes law prohibits. Law puts prohibition, like National Security Act, POTA, Prevention Terrorism. Sometimes they may stop people from giving confidential information. So that doesn't mean that we are supposed to disclose everything to the authorities. No. Don't misinterpret NOCLAR. Now, what is difference between NOCLAR and SA 250? NOCLAR is broader. NOCLAR is applicable to all the chartered accountant in practice. It is applicable to all the chartered accountant in practice doing all the different type of assignments. It is applicable to all the, so NOCLAR is having a broader, it is applicable to all the chartered accountants in service doing all different types of jobs. So it has a universal applicability. All chartered accountants, all people who are doing job. Definitely responsibility changes. Responsibility is different for different chartered accountants. SA 250 is for specific situation. If a practicing chartered accountant is doing audit of financial statement, then only in that case SA 250 will get applicable. So NOCLAR has a broader applicability. SA 250 is for specific situation. Law coverage. NOCLAR says that we will evaluate all the laws affecting financial statements, and apart from that, having financial or non-financial impact. Suppose is non-compliance is linked to license or membership cancellation, some kind of prohibition or blacklisting. We are going to cover everything, analyze everything. All the laws having financial, non-financial impact. But that's not the case with SA 250. It's simply focus on those laws which are having direct effect on preparation of financial statement, on figures given in financial statements. That is tax laws and labor laws, and other laws which may have material effect on financial statement or going concern. So it is focusing just on financial statement. NOCLAR is going much beyond it. So assignment coverage is broader, law coverage is broader. Impact. NOCLAR says to see impact on everyone, impact on investors, impact on creditors, employees, impact on everyone, all the stakeholders. But if we talk here, SA 250 is not having this concept of stakeholder. It simply says what is the focus, impact on financial statement, and what is the impact on going concern. Just focus on that. NOCLAR says that if there is a exceptional circumstances, like there is a eminent means very big breach of law, and there is huge harmful impact on the investors or creditors, employees, on stakeholders, huge breach, huge impact, he should go and inform the authorities. Yes, go and inform. Whether to inform TCW and management before, that depends on situation. If he feels informing them will not be wise, it is not going to stop non-compliance, maybe it will become difficult to take non-compliance, don't inform. It's up to him whether to take TCWG and management in loop. Correct? That depends on the situation. If he thinks informing them is going to improve situation, go to them, else directly go to authorities. So in exceptional circumstances, it says go to it. SA 250 says that don't tell anything to anyone till the time law says it. So see, there's a change in approach. Here it says in exceptional circumstances, go to authority. Here it says never go to authority till the time required by law. So there is a change in approach. So NOCLAR has more assignments, more coverage, more impact analysis, and more disclosures. Applicability of NOCLAR. As per International Ethical Science Board, NOCLAR is applicable to all the chartered accountants in practice doing any practice work, all the chartered accountants who are doing job, any job. But as per ICAI Code of Ethics, NOCLAR is applicable to only those practicing chartered accountants who are doing audit of listed companies. Who are doing audit of listed companies. Only to those chartered accountants, who are doing job in listed companies. So connection with listed companies applicable. That's very interesting. It will be targeted in MCQs. It is applicable from 1st of April 2022. For CA in service, it is section 260. For CA in practice, it is section 360. We already know about it. Now, how to respond? It is given separately. How to respond for CA in service is given in section 260 part 2. And for practice guys, section 360 part 3. Now, in case of CAs in service, it is further divided into two parts. That how senior accountant should respond and how chartered accountants other than senior should respond. Now see, the interesting thing is the actual NOCLAR, how we should respond, is not given in detail in our course. How we are supposed to respond is not given in detail in our course. Only an overview is given. I have written myself things in bracket so that more understanding is obtained. They are simply giving overview of what CA in service should do. If CA in service comes across the NOCLAR, number one, he should obtain understanding of the matter. What is the non-compliance, which law is involved, which sections are involved, what are the consequences? He should understand the matter. Then next, address the matter. He should immediately go to the colleagues, to seniors, communicate what has gone wrong, how to rectify it, how to make things better, what penalty should be filled. He should go and address the matter, inform people and ask for rectification and make things better. Then he may go for further action. If he thinks that there is no response, he may go for further action, informing management of the parent company or resigning. So one is addressing matter, further action. He may think about disclosing matter to appropriate authority, RBI, SEBI, IRDA. He can take 3 steps: going to immediate seniors, taking further actions, or going to appropriate authority. He can take advice for that. He can take consultation internally with the colleagues, seniors, or law firms, or ICAI. What to do? And simply address, take further action, or disclose, or tell to the appropriate authority what should be done. He can take advice, seeking advice. If there is an imminent breach, there is a very huge breach causing substantial harm to people, immediate communication to appropriate authority. Don't wait for anyone, you can directly go. And everything should be documented. This should be the 7-step response if there is a NOCLAR. 7-step response if there is a NOCLAR. Documentation requirement. As per revised code of ethics, NOCLAR, we are supposed to document what? We are supposed to document what TCWG and management did, what was their response. We are supposed to document what was our judgment, what kind of our judgment, and what we did, and it's rational. So what others did in non-compliance, what we did in non-compliance, and how we ensured that public interest is fulfilled and protected. So what they did, what you did, and how public interest is fulfilled. As per standards on auditing, asset 250, asset 230, they say similar things. Document, see, non-compliance is a significant matter. Asset 230 says that you should document all significant matters. So you're supposed to document nature, what exactly went wrong, nature of the things. If there is a NOCLAR, what understanding the matter, that should be documented. Then what were the issues involved and where it was difficult to make professional judgment. Issues involved and professional judgment. So you have to document the matter, issues involved, you have to document issues involved, correct, and professional judgment wherever it was required. Then what conclusion was reached and what was the rationale behind it. Every damn thing need to be documented. Every damn thing need to be documented so that it is easy for reference later. The same things are there in asset 230 and 250. Let's see last few things. Section 2, subsection. Now we are through with the introductory part. We are through with Code of Ethics. Now we are going to CA Act. We are not going to see all the sections. We are not going to see all the sections. We are going to see only some of the sections which are important for us. Okay, so now there's a concept of members deemed to be in practice. See, 95% of the provisions of professional ethics are for those chartered accountants who are in practice. So, moment you take certificate of practice, you are given right to sign audit reports, balance sheet, but then mountain of obligations, they fall on you. There are a lot of duties you're supposed to perform, a lot of things you're supposed to take care of. So COP comes with rights as well as obligation. So some chartered accountants may try this, that I will not take COP, I will do consultancy or etc. work without COP, I will earn money without any obligations. This may happen that some chartered accountants are trying to act smart and run away from the requirements of professional ethics. It is very much possible. To cover those chartered accountants, a concept was derived, members deemed to be in practice. It's a very simple concept. Very simple. It is simply list of activities. If any chartered accountant is performing list of activities given here, he will be deemed to be in practice. All the requirement of professional ethics will get applicable to him. He cannot run away. So it is a simply list of activities. We are going to see that list of activities. Now, important condition. See the chart which is given here. See chart which is given here. See guys. CA can perform the list of activities which are given individually or in partnership. Both the things, both are possible. He can do it individually or in partnership. If he is doing for remuneration, that means he is doing in professional capacity. If he is doing these activities for remuneration, that means professional capacity, I want to earn money. If he is doing it for remuneration, for money in professional capacity as providing accounting services, auditing services or consultancy, that means the intent of doing practice. It is for remuneration in professional capacity. For remuneration, that means professional capacity. That means there is an intent. Deeming fiction will get applicable. Yes. But if he is doing without remuneration, that is personal capacity. He just wants to help relatives. He just wants to help friends. He wants to do social work. If he is doing it without remuneration, personal capacity, deeming fiction will not be applicable to him. He is doing some social work, that's fine. If he is working as an employee capacity for the employer, he is simply helping employer, he is taking the assignment. If you are working as an employee capacity, you are not doing practice, you are not taking responsibility, again deeming fiction will not be applicable. It's applicable only in one situation, if you are doing it for remuneration in professional capacity. Now, Section 2, subsection 2, clause 1 to 3. See, no need to see what is here in clause 1, 2 and 3. We have simply combined everything and made a simple list which is easy to remember. Now, activities given in clause 1, 2, 3. Practice related activities. If after becoming chartered accountant, you go and describe yourself as a public accountant, you do give accounting service. If you describe everyone that you are a public accountant, deemed to be in practice. You set up the office, deemed to be in practice. You offer or offers to perform any accounting or accounting advisory, auditing or any certification verification work, deemed to be in practice. So if after becoming chartered accountant, describing himself as the accountant, setting up his office, offering this work, deemed to be in practice. This is definitely this CA related work. If you're doing this, deemed to be in practice. Now there is an exception. We already saw if you're working as an employee for your employer, you are not doing it as a practice, then if you're working for employer, deeming fiction is not applicable. But there is an exception. If you are doing job under CA or CA firm, working as an employee under CA or CA firm, you are deemed to be in practice. The job guy is deemed to be in practice. It's an exception. Why? So that you get right to train one article. Right to train one article, not obligation. Deeming fiction is applied. Deeming fiction is applied in chartered accountant doing job just to give, correct? Just to give him right to train article, not any obligation. If chartered accountant is doing job with armed forces, he is supposed to have ethical behavior. Again, deemed to be in practice. So there are some practice related activities, service related activities. Then we have section 2, subsection 2, clause 4. Very interesting. Clause 4 gives power to ICI council that you can go on increasing the list of activities whenever you want it, whenever you think it is fit. They, keeping this power in mind, they issued regulation 191. They issued regulation 191. If you are if you're doing work where money is involved, if you are executor for an individual implementing his will, bigger than that, trustee for a trust, bigger than that, receiver or liquidator of a company, if you are acting as executor of the individual, trustee of the trust, receiver, liquidator of the company, big, if you're working for big entities, monetary activities for entities, or where there are dispute, you're acting as an administrator and arbitrator. In dispute, you're acting as administrator, arbitrator, or you're giving advisory or representing for tax, costing, finance. They've increased the list. If you're doing this money related work, executor, trustee, receiver, liquidator, administrator, arbitrator, if you're becoming an advisor or representing anyone, these are two situations. If you're working for big entities, you're working for situations, or there's a special appointment, court or central government or state government has appointed as secretary. Secretary is the most powerful person in any ministry. Most powerful person in any ministry, defense secretary, finance secretary. If you're doing this work, deemed to be in practice. But if it is on salary come full-time basis, then deeming fiction won't apply. So, the list is made bigger by regulation 191. They made list even bigger. They issued management consultancy services. Again, that is a list. That is a recent addition. So we have clause 1, 2, 3, and then the list is increased by regulation 191. List is increased by management consultancy services. Now, what is implication of this management consulting services and all the activities which we have discussed? Person who is performing this activity or management consultancy services will be deemed to be in practice. Yes. And because this list defines CA related work, chartered accountant who are having COP and doing practice, their scope of work increases. They will be able to do more work because CA related work is defined. It is big, it is made bigger. So it is going to increase their work also. So it is having impact. It is going to bring some people in practice and it is going to increase scope of others in practice. So now we know concept of members deemed to be in practice. It's simply a list of activities. If chartered accountants do these activities, they will be deemed to be in practice. And on the other hand, the second thing is that this list gives absolute clarity what a chartered accountant in practice can do. So it is having a dual impact, and that is the best thing. So in that we have seen that section 2 subsection 2 clause 1 to 3 they give list of activities, and clause 4 gives power to the council to keep increasing this list, and they have done this repeatedly. They have issued regulation 191 to increase this list, and then after that they have issued in 2007 management consultancy services, this particular list again to increase the list. Now we have to see this list. Very interesting thing. Activities covered in management consultancy services can either be given through traditional form of practice. That means chartered accountants can give these services. Chartered accountant in practice, they can give these services in traditional form of practice. That means as an individual they can give these services, or they can form a partnership firm to give these services. And they have one more option. Now chartered accountants can compete with McKinsey, with BlackRock, with Goldman. They can compete with all these guys, Accenture. They can make a company to provide management consultancy services. Yes, and that company will be called as management consultancy company. Management consultancy company. Yeah, you're getting it correct. So these services can either be given in a traditional form or corporate form. That's a very good thing for those chartered accountants who are having vision that they will have their own consultancy firm. Now, while defining management consultancy services, they have excluded some services. They analyze that some of the services are very sensitive and they should be given in traditional form of practice, that is as an individual or as a partnership firm, because they are very sensitive and people should take responsibility on their own. That's why they said that few services we are excluding it, so that they are performed only in traditional form of practice. So what they've excluded? In totality, they have excluded 4 things. Most sensitive thing is accounting. So there is a section 25. There is a section 25 of CA Act which says that chartered accountants cannot form company to give accountancy services, accounting services. They cannot form company to give accounting services. Okay. You cannot do accounting. Chartered accountants cannot make a company and then do accounting for people. That is not allowed. That prohibits forming a company for accounting. So you can never give accounting services in corporate form. Number 1, most sensitive is accounting. Then next is, while defining management consultancy services, they excluded statutory and periodic audits. Why? So that again statutory and periodic audit should be given in traditional form. Then next sensitive, they have excluded tax advisory and to give tax advisory services and to represent someone in tax case. Again they have excluded it. So that means that should be again given through traditional form of practice. And then activities covered in regulation 191, which we have seen, which involves a lot of money. Executor, trustee, receiver, liquidator, administrator, arbitrator, a lot of responsibilities, a lot of money is involved, very sensitive. That should be again done in traditional form of practice. See, while defining management consultancy services, they excluded these 3 things. The only reason being that it should be done in traditional form. And then in section 25, they have prohibited companies for giving accountancy services. So in totality, 4 things can be done in traditional form only. You cannot make a company for that. And these are sensitive: accounting, auditing, tax, and regulation 191 things. Finally, the list of services which are covered in management consultancy services. There's a complete list of services. Now, students used to be worried how to remember this big list, how to remember it, such a huge list, such a big list. So guys, we devised a wonderful shortcut. We arranged all the services in such a manner that is very easy to remember. We have arranged it in such a manner that all the services are required right from creating a company till closing the company is arranged in a proper sequence. Let's see. For example, before making any company, people will need they need services for project reports and feasibility studies. Correct? Project reports and feasibility studies, that is covered in MCS. Then once company is incorporated, after incorporation, post incorporation, people will need money. So capital structure planning and fundraising is in MCS. For raising fund, you need to value shares first. So valuation of shares comes in MCS. The work of registered valuer under Companies Act, you can become a registered valuer. Work of registered valuer is covered in MCS. After shares are valued, you will go for public issue. People will need advisor. Advising in a public issue is covered in MCS. That will cover more details. People will call you for making prospectus, for making publicity budget, for appointing agencies for advertisement and other things, and post issue matters like listing, that is covered in management consultancy services. All these issue related things are covered in MCS. Once issue is done, then companies are going to need registrar to maintain records of the shareholders, to maintain the transfer, that is covered in MCS. Yes, practicing chartered accountant can do all these services. The most important thing is it is clarifying all these things can be done by practicing chartered accountant. Once money is raised, they will need a lot of planning. They will need business policy. How many businesses should be done? Whether businesses are complementing each other. Which businesses we should target? We should do it in India or we should do it outside India. So making business policy. After business policy, corporate planning. How many companies will be created? We will have parent company, multiple subsidiaries, associates. Then organization development. How many departments will be there? And after that, we will need budgets. Capital budgets, revenue budgets, cash budgets. That is covered in MCS. Once planning is done, you will need people, staffing, recruitment, giving recruitment services, recruiting people, helping companies to recruit people, to train people, that is covered in MCS. See, all the services which are important where questions has been asked till now and which I feel is important, I am marking them. Correct? I am marking them. So you should also mark along with me. Then once recruitment is done, making organization structure for the company, for the departments, how employees will report to each other, what should be the hierarchy. Then making incentive plans for them, what will be the fixed pay, what will be the variable pay. Once staffing is done, then administrative services. See, administrative services means two things. It can be to manage people, that's also called administration, and to do routine work, mechanical work, that can also be administrative services. Here it means doing routine and mechanical work. We can help clients in mechanical work. Clients have to maintain a lot of Word and Excel files. We can help them in maintaining it. Then with the help of that Word and Excel, they fill up a lot of forms and returns. We can help them in making forms and returns. Then they have to keep track of a lot of dates, when what thing should be filed. We can help them in keeping track of dates, when should be filed. And then finally, we can help them in submitting the form. So we can help from the grassroots level till submission, we can help. In fact, in CGST rules, they have explained what kind of work a GST practitioner does. So all the things which are given in those rules, that can be done by chartered accountant in practice. It will be covered in MCS. Now you have people, you have sorted your mechanical works. Now production will start. Now production is something which engineers will do. It is not our cup of tea. But for production, you need working capital. Working capital management will come in MCS. Inventory management will come in MCS. Management accounting, cost control, MIS will come in MCS. Then value analysis, how to increase productivity, efficiency, that will come in MCS. Once production is done, doing market and demand research, how many products are there, what will be the demand, how competitors will behave, that will come in MCS. Then deciding prices will come in MCS. Then once it is done, recovery. Once pricing is done, goods are sold. Once goods are sold, helping companies to recover their money, that will come in MCS. But acting as recovery consultant only in banking sector. See, in our shortcut, we are talking about recovery after sale, but recovery consultant only in banking sector. We can be recovery consultant. We cannot become recovery agent. We cannot become Gunda and Dada and go and ask for recovery. We can give consultancy, and that in banking sector. How EMI can be reduced, how interest rate can be changed, how to use security, whether additional fund should be given. So we can give this consultancy. Then once they earn money, we can make statements for them, profitability statements, fund flow statements, cash flow statements. We can make all these statements for them. Once they earn money, we can help them with money management. We can make financial management policy for them. We can give investment counseling. Yes, we can give investment advisory to them. Now keep in mind, we can give investment advisory, but we can give investment advisory consultancy, but we cannot do broking, underwriting or portfolio management services. See, we cannot go for broking, underwriting or portfolio management services. We cannot become brokers. We cannot do underwriting. We cannot go for portfolio management. Sir, what is difference between advising and portfolio management? Advising, that means we are telling people what to buy, what to sell, when to buy, what to sell, what quantity, what price, and so on. But portfolio management, we are taking their money and we are ourselves managing it and taking all the decisions. There is a difference. Institute has observed that all these activities, many times people badmouth such people, brokers. He did wrong with me, that person did wrong with me, and so on. So they said that please don't do this in practice work. You cannot go for broking, underwriting and portfolio management. But in practical life, you will file chartered accountant doing this work. They don't do in their name, they do in the name of their family members. They do in the name of wife or brother, sister, mom, dad. But then you must be thinking, why bloody portfolio management is taught to us if we cannot do that? Guys, CA in practice, they are defining things for CA in practice, that CA in practice can do these activities. CA in practice can do management consultancy services. They cannot do, which is not covered here. So CA in practice cannot go for broking, underwriting and portfolio management, but CA in practice, so cannot do this. Leave COP. If you are not having COP, you can do work of a broker. You can do work of underwriter. You can do work of portfolio management. So it is only for practicing chartered accountants that they can give advisory and not these three things. Then amalgamation and merger. Amalgamation. So once they earn money, you can help them with financial management policy. You can help them with investment advisory. You can help them how amalgamations and merger should be done. They have loads of money. Then once they earn money, they are happy. Now for improvement, they can go for special audits. Management audit, operation audit. There is a full-fledged chapter about it. Quality audit, energy audit, environment audit. These special audits are covered in MCS. Once everything is done to make things better, You can do work of system analysis. What kind of hardware should be used? What kind of software should be used? What kind of network should be used? How people should be connected to each other? We can go for system analysis. To keep things safe, we can go for insurance financial advisory. We cannot become insurance agent. No, 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 no. This is not insurance agent. We can become insurance financial advisor. We can go for insurance brokerage. We can go for insurance brokerage, insurance financial advisory and insurance brokerage. That's very interesting. We can go for insurance brokerage. See what these guys do. Roughly, if there are assets of 100 crores, you will need around 1%, 1 crore insurance premium. That's a very rough calculation. So insurance financial advisor and insurance brokerage, they are generally in the form of corporate. They're in corporate form. They take license from IRDA. Now these guys, they do a lot of research and they help companies to get best insurance policy for the plants, for the assets, for vehicles, etc. by negotiating with different insurance companies. So they play a very important role getting best of the policies from people from different various insurance companies. That's why I call insurance financial advisory, insurance brokerage. And lastly, if company is coming to an end, you can give insolvency services, insolvency professional. Yes, giving insolvency services is also covered in management consultancy services in MCS. That's interesting. Okay. Now we have seen this prospectus. If when it comes to issue, we can help with prospectus, publicity, selection of agency, post issue matters. Now we have discussed that you cannot go for tax. You cannot go for tax advisory. Tax advisory is very sensitive. It is not covered in management consultancy services. So you cannot give tax advisory through management tax advisory through a corporate firm. That's not possible. But then guys, when we make financial policies, we have to keep in mind tax implications that you have studied in FM. When you do capital budgeting, you have to keep in mind tax implications. So there are 4 areas. See, there is a hashtag. There are 4 areas where along with giving financial advisory, we can also give clarification and advisory on tax aspects. So what is 4 areas? When you make project reports, feasibility reports, you can comment, you can advise regarding tax matters. When you make capital structure policy, when you make working capital policy, when you make financial management policy, in these 4 things, you can cover the tax aspect also. You can cover, guys, tax aspect also. So that's interesting. So this is the complete list and the important list. Section 4. Who can become member of ICAI? There are 2 routes. Yes, you are correct, listening correctly. There are 2 routes to become chartered accountant in practice. There are 2 routes, guys. A regular route, which we all follow generally. You need to clear the exams prescribed by CA Institute and also complete the trainings given by them. Then you can apply for membership. You can become member of ICAI. That's a regular route. There's one more route. Section 4, subsection 1, clause 5 says that you can become member of ICAI even if you have cleared exams without India. That's the old English. Without India means outside India. If you have cleared accountancy exam outside India, if you have completed training outside India, if you have done this outside India, okay, then you can become, but you'll have to fulfill, but then in that case, such exams, such trainings should be recognized by central government by central government or council that they are equivalent to Indian chartered accountants. And you have to fulfill additional conditions. So yes, people who have qualified foreign exams, people who have completed foreign trainings, they can also become chartered. They can also become chartered accountants in India. In past, in 1990s, there was a concept of direct membership. Direct membership. What used to happen in direct membership? If you become member of some foreign institutes, automatically you can apply for membership in India. Oh, that was wonderful. But now that concept is gone. Now there's a concept of MOU and MRA, Memorandum of Understanding and Mutual Recognition Agreement. Mutual Recognition Agreement, MOU and MRA. So now, if that foreign institute is covered in MOU, MRA, then members of that institute have to come to India, appear for 4 papers, and they can become member of CA Institute. Every batch I tell that yes, this is one more route. So you guys can do research in your free time. You can do research. You can read MOU and MRA and find out whether you can become member through the foreign route. There's only one thing: they should not have any prohibition for residents of India using this MOUs and MRA. If there is no prohibition, you can become member of CA Institute through MOU and MRA also. That will be really interesting. Then we talk about fees. Then if we talk about fees, CA Institute can charge fees for people, those who want, for person who want to become chartered accountant and become member. They can charge fees up to 3,000 rupees. And if they take permission from the central government, CG, then it can go up to 6,000. Go up to 6,000, guys. Now next is section 5, associate and fellow chartered accountant. As soon as any person becomes member of the CA Institute, his name will be written in the register as associate chartered accountant or associate member of ICAI. He will become associate. Now senior members are called fellow member of ICAI, fellow chartered accountant. How a person can become a fellow chartered accountant? How he can become a fellow chartered accountant? It's simple. First of all, it's not going to happen automatically. You have to apply for it. If any associate chartered accountant wants to become a fellow chartered accountant, he will have to apply for it. He's not going to become it automatically. And he will have to pay fees to CA Institute. CA Institute can charge fees up to 5,000 rupees to become a fellow chartered accountant. And if he gets prior approval from central government, it can go up to 10,000. Now, who can apply to become fellow chartered accountant? Associate member who is in continuous practice for 5 years. So he's the associate member. He is in continuous practice for 5 years. Now he has become a senior member. He can apply. For FCA. Now keep in mind, foreign practice will not be counted. Only practice in India will be counted. Now, apart from that, if a person is just an associate member for continuously for 5 years, he can also apply. If someone is in practice, he can apply. Other person who is a continuous member for 5, he can also apply. But there are conditions. There are some conditions, some qualifications. Here qualification means condition prescribed by council. Council says that they will have to prove that they have same kind of knowledge and skills which a chartered accountant with 5 year of experience in practice going to have. Now, how they can prove it? They have same kind of knowledge and skills. So CA Institute said that we will consider that same knowledge and skills are there if the person has done job in government entities or PSUs or below that commercial entities or local bodies. If they have done work with these people for continuous 5 years or more, for 5 years continuously, 5 years or more in areas of account, tax, costing, all our subjects, then again it will be deemed that you have requisite experience and knowledge, you can apply for FCA. So the point is, those who are in practice can also apply. Those who are in practice, they can also apply, and people, those who are in job, they can also apply after this clarification. Now, apart from that, if a person is doing job under CA firm, then you don't have to see even in which area this job, because if person is working with CA firm, definitely they are doing CA related work, they will be experienced. Break of 1 year can be condoned, that means they are going to forgive. It's okay, even if there's a break of 1 year, we will condone it, we will forgive you, we will consider that you have done things continuously. Experience can be partly in practice and partly in job, even that is clarified. That's interesting. Section 6, significance of COP. It says that it is mandatory for all chartered accountants to take COP for doing practice. Now, even if you're doing, it is mandatory if you're doing practice in India or outside India. Yes, if chartered accountant is going outside India, still CA Act is applicable to him, and he is supposed to take COP before doing practice outside India. So if you're going outside India, take COP from Indian Institute. He may have to take a COP from the foreign institute also. And if there is a conflict, suppose he cannot take two COPs, if there is a conflict, go and ask CA Institute what should be done. But it is mandatory for chartered accounts to take COP if he is practicing in India or outside India. Now, so if a person is not taking COP, then it's a contravention of section 6. He will be punished for that. And further, he will be deemed to be in practice under section 2, subsection 2, and all of the professional ethics will get applicable to him as if he is in practice. So there will be two implications if someone is doing practice without COP. Now, next is, what if there is a temporary suspension? What if there is a temporary suspension? Now, what is that? So, this is a very interesting case. So, there was an advocate after completing his LLB, after becoming advocate. Now, he has knowledge of law. So, he was practicing tax. He was doing practice in tax. He was giving tax advisory, and he was happy and serving clients sometimes for tax advisory, sometimes for legal advisory. Someone advised him, why don't you become chartered accountant and give more services like accountancy and finance and auditing and so on to their clients? So he did that. He completed his CA and started giving all the services. Now, while giving services, he did some unethical activities, and his COP was suspended for 6 months. So the situation is, COP is suspended for temporary period. If COP is suspended, that means he cannot do practice. So he sent a letter to the CA Institute. Dear CA Institute, before becoming chartered accountant, I completed my LLB. I was an advocate and I was doing my tax practice as an advocate. So during these 6 months, I want to do practice of tax not as a chartered accountant but as an advocate. Can I do that? CA Institute said, once you become chartered accountant, even if there is temporary suspension of COP, or if temporary suspension of membership, CA Act will be applicable to you. You are bound by CA Act. And as you are bound by CA Act, CA related services which are generally given by CA related services can be given by you only in a capacity of a chartered accountant. You can use only one capacity, chartered accountant. For giving CA related services, you can use only one capacity, that is chartered accountancy. That means now tax is a CA related work. You cannot give this in a capacity of a LLB advocate. You cannot go for company law service, company law advisory in capacity of a company secretary. No, 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 no. That will be wrong. Once you are a CA, CA Act is always applicable, and all CA related work can be done only in capacity of a chartered accountant. And now because you cannot have COP for 6 months, you cannot do any CA related services. Are you getting this point? So final conclusion is, you cannot use other capacities for doing CA related work. During temporary suspension of COP or membership, you cannot use other capacities to do CA related work. That is not allowed. That's very interesting. It has been asked multiple times in exams. Even if those works, those activities don't need any special qualification. Like for tax advisory, you don't need any special qualification. For GST work, you don't need special qualification. Any commerce graduate can do it. Still, as it is a CA related work, you can do it in CA capacity only after taking COP. I hope that is crystal clear in your mind. Now, working as an employee. If a chartered accountant is doing CA related work, accounting or financial advisory or tax advisory, representing in tax cases, for employer, that means he is doing it in an employee capacity. He doesn't need COP. COP is not required. But if he's going beyond the employment requirement, he's going beyond employment agreement, he's giving services to his colleagues, he's helping in tax returns, he's giving tax advisory to his colleagues, he's going beyond requirement of the employment, that means he's giving services. Then for giving services to colleagues, he will need COP. For if he's working for employer, it's an employee capacity, he will not need COP. But if he's going beyond that, he's helping his colleagues, he's helping them with taxes, finance, etc., he is going to need COP. Now, what is concept of dual COP? Can a chartered accountant have 2 or more COPs? See, chartered accountants cannot go to high court, Supreme Court and do practice. It's lawyers who do it. So chartered accountant, if the case goes to courts, he cannot fight it. He has to take help of the lawyers. So CA Institute observed that he's working hard, he's doing everything, but then in litigation he could not go and fight the cases. That's not possible. So CA Institute said that chartered accountants, you can complete your LLB and get the COP from Bar Council. We are allowing you to keep 2 COPs. One COP of chartered accountant and another COP of Bar Council. Okay, you can do that. Just ensure that you don't write both the words, designation. We are going to discuss this later. Both the designations together. Don't write both the designations together. That is chartered accountant and advocate. When you're doing CA related work, your visiting card and letterhead should write only chartered accountant. And when you are doing court related work, your visiting card and letterhead should write only advocate, not write 2 together. But the point is, CA Institute has allowed dual COP with Bar Council of India. But then Bar Council has not allowed dual COP because they fear that their members will lose the work. So now, in practical life, dual COP is not allowed as on today because permission of both the institute will be required to do it. Institute has allowed, but Bar Council has not allowed it yet. Now, can a COP get cancelled? Of course. If name of the person is removed from the register, COP will get cancelled. COP will get cancelled. If it is proved that certificate was issued on the basis of incorrect, misleading information, again COP will get cancelled. So it is a sequence. Removal is a very big thing. So it's number one. Then below that, certificate was issued on wrong information, again cancelled. Below that, fees is not paid the 30th of September. Chartered accountants are supposed to pay their membership fees, COP fees of the financial year. Suppose we are talking about financial year 23-24. Then fees has to be paid by 30th of September 23. By 30th September, you have to pay fees of that financial year. Okay. If you don't pay till 30th September, your COP will get cancelled. Or if a person has surrendered COP, now he no longer wants to do practice, he wants to go for a job, he wants to go for a business, that's possible. He may cancel COP. So these are the 4 reasons when COP can get cancelled. Don't worry, even if COP is cancelled, you can go for restoration. You can simply fill up the prescribed application and pay all the prescribed fees, and you can ask for restoration of COP. Yes, restoration of COP is allowed. Restoration of COP is allowed. Correct? It can be done. And now the very interesting thing. Suppose your COP is cancelled because of non-payment of fees. 30th September you didn't pay and your COP is cancelled. Suppose in October it is cancelled. If you pay pending fees before the end of the financial year, that means before end of 31st of March. If you paid before end of 31st of March, then in that case your COP will get restored from the date it was cancelled. So there will not be any break in continuity. Yes, there will not be break in continuity. So CA Institute, it is encouraging you to pay the fees before year end. To pay the fees before year end, and you can avoid break in the term of COP. Continuity of the COP. Now we are seeing interesting section 7. Section 7 is going to tell us about very interesting 3 things. It's going to give us guidance regarding 3 things. Prefix, letters which are written just before the name, that's called prefix. And then designation, and below that, designation which is written just below the name. Letters which are read just below the name explaining the work of the person, that is called designation. And after that, other descriptions and letters. So I have written CA Ravi Taori, CA is a prefix, chart account is designation, BCom is other description and letters. So it is going to tell us about 3 things. It's very interesting. Let's see. Section 7, prefix. Any person who has become member of CA Institute can use prefix CA. Of course, it's their right. They have become CA. They can use CA. Irrespective of whether person is in practice or not. Irrespective of whether the person is in practice or not. He may not be in practice, still he can use CA. And that's absolutely fair, guys. He should be able to use word CA. That is absolute, that is allowed, whether he's in practice or not. In fact, if a person has done maybe PhD, some people love to study more and more, done PhD, so he becomes doctor. CA Institute is very kind hearted. They say that you can use the prefix doctor and CA both together in any sequence, CA doctor, doctor CA, and if required they can use only doctor and leave CA. It is a right, it is not an obligation. Writing prefix is a right, it is not an obligation. So prefix is our right. Definitely it is our right. It's not an obligation. Now, What is not allowed? Okay. Now students many a times, they make email IDs, they make social media handles, and they use the word CA before becoming chartered accountant. That is absolutely not allowed. Sometimes students write FCA, future chartered accountant. That is not allowed. People cannot use these two letters without becoming chartered accountant. They have value. You cannot simply put CA anywhere. So students, you cannot, if student people who are yet to become member, they cannot put these two letters. It's clarified from institute. And if membership is cancelled for some reason or the other, for non-payment of fees or some order, for any reason, if membership is cancelled, membership requirements are not fulfilled, again such people cannot use the prefix CA. Now what designation? It's interesting. See, this is divided in two parts, for chartered accountant in practice and CA not in practice. If a chartered accountant is a practicing chartered accountant, if a chartered accountant is a practicing chartered accountant, and if he's writing designation, it is mandatory for him to write designation only chartered accountant. No addition, no deletion, no modification, no substitution, nothing. He cannot write rank holder chartered accountant, first attempt chartered accountant, chats, industrial accountant, corporate accountant, this accountant, that accountant, consultant, advisor, investment advisor, tax consultant. He cannot. All the chartered accountants in practice, if they're writing designation, they have to write only chartered accountants, so that there's a consistency and it becomes a brand. It becomes a brand. Don't dilute our brand. Use the word chartered accountant. It's our pride. It is our pride. Correct? It is our achievement, and it should be written as chartered accountant. Don't dilute it. If you are not in practice, then you have an option. You have option to use chartered accountant. If you are option number one, if you are using designation chartered accountant, no addition, no deletion, no substitution, no modification is allowed. But if you're not using the designation chartered accountant, you can write anything you want. You write photographer, you write influencer, you write professor, you write any damn thing. That's absolutely fine. Now, next is what is not allowed when we talk about designation. Modification is on industrial accountant, cost accountant, CA first attempt, income tax consultant, management consultant. You cannot write these things. You cannot write these things. Writing these things is not allowed. And next interesting is, now merchant banker. Institute has given very beautiful clarification. CA firms can go to SEBI and they can get themselves registered as a merchant banker. Merchant banker are the people who help their clients in public issue, IPO or FPO. So you can do that. You can help your client in the whole process. And in prospectus, in prospectus, your name can be written under the heading, or there can be designation given to you, advisor to issue or consultant to issue. Even writing consultant is allowed. Advisor to issue, consultant to issue, it is allowed. You can do that, yes, because it's a very popular industry practice to write advisor to issue or consultant to issue. But then on visiting card and letterhead, on visiting card and letterhead, on visiting card and letterhead, you cannot write advisor to issue. You have to write chartered accountant only. So in prospectus, change is allowed. In exam, there was a question that in prospectus, CA wrote merchant banker. Writing merchant banker is not allowed. And in visiting card and letterhead, he wrote advisor to issue. So at both places, it is wrong. Then interesting next is other descriptions or letters. other descriptions or letters. Now, what is that other descriptions or letters? Okay, see. So just below designation, you write other descriptions and letters. There you can write qualifications and memberships obtained from other institutes. Now they are very carefully, they have divided in two parts: qualifications and memberships of other accountancy bodies. See, CA Institute is an accountancy body. At the same time, there are other bodies giving education and knowledge about accountancy, like cost accountants. They are also talking about, they also teach costing and accounts, costing, finance. It is an accountancy body. CFA, it is an accountancy body. AICPA USA is an accountancy body, and so on. Now, if you want to write qualifications or membership from other accountancy bodies, if you want to write qualify from other accountancy bodies, you can write it only when it is approved by Council of ICAI. Only if it is approved by Council. So CA Institute is saying, if you want to write qualification membership of other accountancy bodies, you want to promote them, you will need our permission. You will need our permission, because they have seen that sometimes people misuse it. It has happened past that people write all the qualifications and memberships, and sometimes foreign institute claim this person is getting so much of success because of our degrees. He got everything because of chartered accountancy. He got everything because of chartered accountancy, and people are claiming people are claiming it as if it is because of their degree. It is a gross misuse. Correct? So till the time you don't have a permission, you cannot write any qualification membership. Like they have allowed that if you have qualified and you have become member of the CWA Institute, you can write ACMA or FCMA. You cannot write cost accountant. No. You can write ACMA or FCMA. On the same lines, if you have qualifications or membership of the foreign professional bodies which are covered under MOU, Memorandum of Understanding, or MRA, Mutual Recognition Agreement, like we have MOU, MRA with these guys. I've written a shortcut E, ISCA. ISCA used to be a subject. E, England. I, Ireland. S, South Africa. C, Canada. A, Australia. Our institute is having MOU, MRA with them. So if you take any qualification or membership of these institute, you can write it. You can very well write it in other descriptions or letters. That is allowed. You can go to Google. You can go to Google and search for ICAI, MOU, and MRA, and you can easily get this list. So this is the list. We have MOU, MRA with Nepal, Malaysia, England, Canada, Ireland, South Africa, Australia, and so on. Then dual COP. We know about dual COP. Dual COP is allowed with CA and Bar Council of India, but Bar Council has not allowed, so practically it is not possible. Even if it would have been allowed, you cannot write both the designations together. You cannot write chartered accountant and advocate together. There should be separate stationery for chartered accountancy practice, separate stationery for practice as a lawyer. If it gets allowed in practical life, still designations cannot be written together. We know all these things. We have already studied this with section 6. So when come to other descriptions and letters, writing CPA is not allowed. CPA is given by AICPA, it is accountancy body, and it is not yet allowed by the CA Institute. You cannot write CPA. You cannot write CFA from CFA Institute USA or ICFI India. You cannot write that because it is not yet allowed by CA Institute. Like I have done my 2 levels of CFA USA. I have done 2 levels. Didn't appear for the 3rd level. I cannot write that because it is not yet allowed. So if you are CP or CFA, you can write it in your resume, in your CV, you can in your description, in You can write it where you are explaining about yourself, but you cannot put it on the visiting cards and letterheads. There you cannot write it. That's not allowed. And see, writing chart account in itself is a big thing. Don't try to top up your name, just boost your name by writing directorship. It's not required. You are a chart accountant, already you are a brand. You stand for source of knowledge, you stand for skills, you stand for efforts, you stand for achievement. You don't need to write anything else. So chart accountants are not allowed to write directorships in the companies. That I am directorships in the company. I am director of so and so company, so and so company. No, you cannot write it. You cannot write position in political parties also. You cannot write position in various Rotary clubs, Lions club, JC's clubs. You cannot write that. It is not allowed. What about qualification membership of other uh, of other bodies other than accountancy bodies? Other than account, you can very well write it. You can write letters indicating qualification. You can write LLB, that is not from accountancy body. You can write LLB, BCom, MBA. It is absolutely fine. That is not coming from accountancy bodies. You can write insolvency professional. You can definitely very well write insolvency professional. Guys, uh, insolvency professional is again a degree given by it can be given by CA, CS or CMA. If you take this degree from chart account from CA institute, you can definitely write it, but you cannot write it if you are taking it from CS institute or you are taking it from CMA institute. That is not allowed. So writing insolvency professional is absolutely fine till the time you are taking it from the Indian institute. Don't mention other insolvency professional agencies like CS or CMA. You can very well write registered valuer. You got qualification of registered valuer, you can definitely write it, no problem at all. Correct? The registered valuer, registered under Companies Act, under insolvency code, you can definitely write it. What about designation of the firm? So we spoke about individual chart. What about the firm? Firm can write designation chart accountant if all the partners are CA having COP. If all the partners are CA having COP. Section 8. Okay. Section 8. Disqualification for ICI membership. Who is disqualified to become CA member of CA Institute? Person who has not grown up. People who have not attained the age of 21, they cannot become member of ICAI. They cannot become member of ICAI. Number one, they cannot become member of ICAI. Then, who have grown up, but their brain has not yet grown. People of unsound mind, people of unsound mind again they are disqualified to become chartered accountants. They cannot become chartered accountants. They cannot become member of ICAI. So people have not grown up but not their brain has not grown, unsound mind, they cannot do that. If extraordinary talented people, those who are insolvent, they are making fool of others, even they cannot become member. Insolvents cannot become member. Now here we need to discuss few things regarding insolvency. See, when liabilities are more than the assets, that means it's a negative net asset position. Negative net asset position. If any person is facing this problem of negative net asset position, people will come and ask for money again and trouble him a lot. He can go to the court. Step number one, if this is the situation, step number one, he can go to the court and convince the court that, see, these are the assets I am having, these are the liability I am having, and liabilities are much more than assets. So please tell everyone it is not possible to pay off everyone. Please declare myself as insolvent. So step number one, court is going to declare him insolvent. Further, if requested, Court can take all the assets of the person, sell them one by one, recover the money and pay liabilities. If something is left, give it to the person. Give it to the person, or if no money is left, then remaining liabilities will be nullified. Remaining liabilities will be cancelled. That he doesn't have money from here, from where will he pay remaining liabilities? Now, this process of selling assets and paying of liabilities is called discharging insolvent. So, step number 2, court is going to discharge. Court is going to discharge insolvents. Okay, discharge insolvent. And now, step number 3. Step number 3. If someone requests court that, see, this insolvency is not my mistake, I have not done anything wrong, it is because of misfortune. I made a factory and then there was an earthquake, I lost everything. That is not my mistake. See, that is not my mistake. It is simply a misfortune. It's my bad luck. Then they will write on the certificate and say that it is because of misfortune and he has not done any misconduct or unethical activity. So, if liabilities are more than assets, it's a negative net asset situation. Go to the court and 3 steps will happen. Step number 1, declaration of insolvency. Step number 2, discharge of insolvent. And step number 3, misfortune certificate. What they say, if your net asset position is negative but it is not yet confirmed, absolutely fine. You can continue to remember member. Day you are declared insolvent by the court, you are disqualified. Day you are discharged, still you will remain disqualified. If you get misfortune certificate in step number 3, then you will be qualified to become member again. So person will become qualified to member again only after step number 3. That's very important. Only after step number 3. See, not at an age of 21 disqualified, unsound man disqualified, undischarged insolvent. He is not discharged yet, disqualified. Discharged but not having certificate stating misfortune and not misconduct, again he is disqualified. Only after getting certificate he will be qualified. We are discussing disqualification. Then, if a person is convicted by court in India or outside India for crime involving moral turpitude and is punished by transportation, that means you cannot come in a particular area, or imprisonment. If you're doing something very wrong, you have murdered someone, you are involved in terrorism, you're involved in drugs, you're involved in very bad crimes. If a person is convicted for very bad crime and then he is imprisoned or charged with transportation, he will be disqualified. There are exceptions. If the conviction is of technical nature, like procedure not followed, or he forgot to do work in professional capacity, he forgot to do some work of the client. If conviction is of technical nature, if it is of a technical nature, it's a small nature, it will be an exception. He will not be disqualified. If victim has granted pardon, again he will not be disqualified. If central government says that we are removing his disqualification, he did whatever he did for nation and we are removing his disqualification. If they remove disqualification, again disqualification will not be applicable. So in this 3 situation, disqualification will not get applicable. If his name is removed for some specified period, again he is disqualified for that specified period. So these are 5 disqualification from membership. Chartered accountant himself has to specify whether he is disqualified at the time of becoming member, and after that he himself has to inform institute if he gets disqualified anytime. So at the time of becoming member he has to inform, and he has to inform whenever he gets disqualified. So it is his responsibility to keep ICI informed about his disqualification. If he doesn't do that, it will be considered as a misconduct, as unethical activity. Then for knowledge, we have seen this. We have seen 3 steps in insolvency. Step number 1, court will declare person insolvent. Step number 2, court will discharge insolvent. Step number 3, court will give misfortune certificate. We have seen this. Now, removal of name from register. Can name be removed? Yes, shortcut is FDR. F, if person has not paid annual membership fees, his name will be removed. D for death. If person has died, his name will be removed. If the person is disqualified under section 8, his name will be removed. Then R, if his name is removed by any order passed under C Act, again his name will be removed. If a request is received from a person, like Mr. Harish Salve, very famous lawyer, he was a chartered accountant, but then he comes from the lawyer family, lawyer background, and he was more interested in law. He gave away the membership of CA Institute. He gave away membership of CA Institute and he is focused on being lawyer itself. Correct? So he sometimes people surrender. Again, name will be removed. Can name be restored? Of course. If you apply in a prescribed form along with all the fees which is pending and all additional fees required, then your name will be restored. Membership will be restored. What will be the date of restoration? See, we have made few changes in the chart. You also have to make those changes. If membership is removed as per the order of High Court or Board of Disciplinary Committee, we are going to study about these authorities. We are going to study in some time, we are going to study about these authorities. If name is removed by order of some authorities, correct? By order of some authorities, then it will be restored as per the date given in the order. So again, when to come back will be specified in the order. Now next is, suppose a person's membership got cancelled and now he fulfills all the requirement, has proper form, fees, everything in the same financial year in which his membership got cancelled. They are saying that if you fulfill all the requirement, if you come out of disqualification, fill up the application form, okay? And fill up the application form and you apply before the end of the financial year, in the same financial year. If you apply in the same financial year, your membership will get restored from the date it got cancelled. There will not be the break in continuity. See, in case of certificate of practice, they clarified for pending fees. Here they are clarifying for any situation. If you apply within same financial year, we will give you the same date and there will not be breach in continuity. If you apply in any other case, that is different financial, if you apply, your date of restoration will be the date on which you applied along with the fees. Now we are through with section 20 also. See guys, now very interesting types of misconduct. What do you mean by misconduct? If chartered accountant is doing some unethical activity, it is called as misconduct. There are two types of misconduct. If he does something wrong while performing his profession, while doing some activity in practice, or while doing job, it's called professional misconduct. It's called professional misconduct. Okay. If he does something wrong in his personal life, which is not related to the profession, or job, it's called as personal misconduct. Okay. Now, so I have defined what is misconduct, what is professional misconduct, and what is personal misconduct. Now, in CA Act, once sections are over, two schedules are given, Schedule 1 and Schedule 2. They have list of, there they specify list of the activities. If you are doing these activities, if you are involved in these activities, that means you have done misconduct. So they are providing list of instances, list of activities. If you're involved in doing this, it will be a misconduct. Irrespective of what was your intention, that doesn't matter. Irrespective of what was your intention, that doesn't matter. Irrespective of whether you are harmed or not, whether any person is harmed or not, it will be deemed to be misconduct. So they have provided the list. Now, in first schedule, there are first three parts. They give list of activities which will be considered as professional misconduct. In second schedule, first two parts, list of activities again which will be considered as professional misconduct. So list of activities which will be considered as professional misconduct. Don't worry about this. I will make you learn everything very easily later on. Then there's a concept of other misconduct. They have specified list of activities. If these activities are done, whether in professional or in personal life, CA Institute will consider it as a misconduct. It is covering your professional life also, it is covering your personal life also. Because it is covering both, it is named as other misconduct. CA Institute says that chartered accountant should behave ethically in his personal life also. If he is doing some activities, whether it's professional life or personal life, we will consider it as a misconduct. We will call it as a other misconduct. Because these activities is covering professional life as well as personal life, a new terminology is given to it as other misconduct. Such activities are defined in first schedule part 4, second schedule part 3. They are defined, they are given in other misconduct. Now listen guys, CA Institute, so it's very simple. Activities which are only for professions, they are called professional misconduct. Activities which are for profession as well as as well as personal life, they are called as other misconduct. We have section 22 of the CA Act which says that apart from the list of activities which are given in the schedule, if there is any other matter where chartered accountant has done anything wrong, then institute has power to investigate it just like it investigates any other misconduct under section 21 and declare that matter as other misconduct. So institute can declare any wrong conduct of a person as a other misconduct. So from this you will get other misconduct from two places. There are list of activities which are given in the schedule, they will be called as other misconduct, and then you will have other misconduct from past decided cases. Are you getting this point? So when we talk about other misconduct, list is given in the schedule also, and we will have list of past decided cases which are considered as other misconducts. So you will get other misconduct from two places. I hope you are clear about this. Section 22 explains that list of professional other misconducts is given in schedules. It is given in schedules. It further says that the disciplinary directorate, we are going to study about authorities in some time, can exercise his power to collect information and do investigation as given in section 21 subsection 1 in other circumstances, and if appropriate proceed ahead with the case of other misconduct. So they are saying that as per section 22 you can go and investigate any other matter, and investigation can be done as per the procedures and power given in section 21. So institute can go beyond the list of activities which is given and investigate the matter and declare it as other misconduct. Some of the instances wherein past institute has declared activities as other misconduct. Let's see this. So there's a list. Now again, students sometimes find it difficult to remember the list. Sometimes they find it difficult to remember the list. So we have made a shortcut. This is a very old memory trick. There's an old memory trick. If you remember something, try to associate other things that with that. You will automatically remember it better. So now we all remember A B C D E F G. No one is going to forget that ever. So I have associated the list with A B C D. Okay. So A stands for anger. If in anger a chartered accountant has used abusive language, filthy language, insane comments about anyone, correct? Anyone, then it will be considered as other misconduct. In past, chartered accountant has done that, and institute court declared it. Earlier, this thing used to be done by court. Now it is done by authorities of the institute. It was declared other misconduct. Again, in anger, if a chartered accountant publishes information in a newspaper to malign image of others with a malified intention, with wrong intention, again he is doing wrong. It was declared other misconduct. And now next, very interesting. A for article. So A for anger, there are 2 points. Article. If a chartered accountant in practice makes article or audit assistant to do non-professional work, like a chartered accountant made article do farming, agriculture, non-professional work, it was declared other misconduct. If a chartered accountant practice makes article to work in election campaign, yes, that was a question by ICI. Election campaign, it is termed as other misconduct. Yes, so you can put a complaint against your principal if he has made you work, in elections. Then bank. If a chartered accountant submits bogus bills to claim expenses, that's so bad and embarrassing. You are there to catch hold of frauds and you yourself are doing fraud. It was called other misconduct. C for client. If you are pressurizing, coercing client, give me fees, other misconduct. You are pressurizing, coercing client to give loan to himself or his friends or relatives, sanction loan to him or his friend relatives. Very bad. Again, other misconduct. If you are retaining books of accounts of the clients and other documents without any reasonable reason, other misconduct, that's highly unprofessional. Client will not be able to do business. He won't know from whom to take money, how much to take money, whom to pay money, how much to pay money. In fact, Ethical Standard Board has said that, even if your fees is pending, you cannot retain books of account. It's highly unprofessional. It will be called as misconduct. You cannot retain books of accounts and other documents of the client. If you're doing it audit, it's fine. But apart from that, you cannot do it. It will be called other misconduct. D for deceiving. See, you went to client office. CA went to client office. He is manipulating minutes of board of director of the company. Falsification. Other misconduct. He is giving fake documents to the companies. That this communication is from ROC, this communication is from income tax department, fake documents. Other misconduct. So after client office, he is going to own office. He has started with the new business. He is giving fake experience certificates. Give me 2000 2-year certificate, give me 3000 3-year certificate, give me 4000 4-year certificate. He's doing these things. That's so bad. Other misconduct. He's going home and forging will of the relative. Again, it will be considered as other misconduct. Then E for employer. He is submitting fake experience certificate. Other misconduct. for getting job. After getting job, he is working negligently. He is forgetting things. He lost the laptop. He lost important documents. He is not attending meetings. He is giving away confidential information. If he is doing these things, other misconduct. EF, then fraud. You know that there are central council members. People who are part of the council, they are called central council members. And CA Institute has regional councils, east, west, south, north, and center. Regional council members. Central council members and regional council members, there is misappropriating money, using CA Institute's money for personal use. This has happened. It was declared as other misconduct. If a CA is issuing checks and they are getting bounced because of lack of funds, insufficient funds, that is embarrassing. It is embarrassing that he is making fool of others. Other misconduct. In a case, there was an NBFC and he was a managing director. He issued checks which bounced because of lack of fund. That means he fooled people. Other misconduct. Even Negotiable Instrument Act will get applicable 1881. It will be a non-compliance of Negotiable Instrument Act. It will be a contravention of Negotiable Instrument. He will be punished there also. Then G for government. He is not replying to authorities, export authorities, police department. He is not replying to authorities. How you are not replying to authorities? Other misconduct. When government people came to his premises, they found some confidential documents or documents which are stolen from the government departments. Bad. Other misconduct. Then he is trying to loot government. He is writing a book on black money, how to generate black money, secrets of black money. You're writing book and promoting it. That is so bad. Declared other misconduct. He is filing 2 returns. It was possible earlier, now it is not possible. 2 returns to take benefit of the exemption 2 times. Other misconduct. Fabricated tax payment, advance tax payment challan of the client. Fabricated challans, applied for refund, opened a fake bank account, and he misappropriated money of the client. Again, fooling government and client. Other misconduct. These all are the examples of other misconduct. A, B, C, D, E, F, G.